All right. Let's get going here. Hello, hello. Good afternoon, good morning, depending on where you are. I'm going to be talking a little bit about what I think is going to happen in the market in the coming week. Going into May, I think we're going to start seeing some pretty decent market action here. And nothing here is particularly unexpected, but I do want to kind of recap. So we'll probably start the day with just some recap. I think mainly because Thursday I didn't even stream at all, and it was just a busy day for me. I was back and forth on the Discord group, but I did not stream. And then Friday was day off for Good Friday, and spent the rest of the weekend with family for Easter, and that's that. So it wasn't really a lot of time for me to look at the market and just sit there aside from on Thursday. And so I did some analysis on Thursday, and I'm going to try to do something a little different today. I'm going to try to kind of ball this together so that perhaps I can come back later and even post it as like a short form video. And I haven't really done that lately. I haven't tried to do that, but I'd like to do that. So anyways, here we go. So basically we're going to be talking about focusing our main attention on two different things. Okay, one is going to be the main S&P 500 index. Might look at IWM for a minute, and then we'll also look at AMC. And I just want to focus on those two today because I think that though they're not one-to-one, and very rarely have they been in recent years one-to-one, the market on the whole, with the volatility that's been going on, has been kind of step-locked, I think, and lockstepped rather. And I think when you look at AMC and you look at the market movement, it's very much in line with what we see on the S&P 500. There's going to be some fairly notable differences, I think. And I want to kind of get to those going into today on the stream here, and also for kind of a shorter form video. So one of the things I noted last week was this setup actually does bear a very strong resemblance to what we saw back in April. And what I mean is that year over year, if you look at the April chart and you look at where we are now on AMC, there's actually quite a strong sense of continuity. Now, this doesn't mean that it couldn't end badly. Like, one of the things you'd have to watch for, obviously, is a more distributive setup. But on the whole, if we go back and we look at what happened last year, and I'm on the 1 hour chart right now, this actually has a lot of similarity. There's a lot going on here that needs to be kind of addressed. And I think we've got time. I can probably do it pretty quick. But the one thing was, like, after this major sell-off, there's a distribution that happens going into from February into March. Big sell-off goes down into April 15th. Okay, then there's a decent reaction, but this reaction is quite large, and we've talked about it before. This reaction is roughly the equivalent of this kind of, well, we'll call it like a shallow S-curve because it looks a little flat on the bottom. But we've talked about that and how that LSPY that sets up April 4th through the 8th is essentially like where the liquid center is for this range, and ends up being kind of the center point, the anchor point, and then it ends up being the place you leave before the end. What you don't see here back in April is some kind of a massive immediate upthrust that then, comes back down, like we saw with the squeeze that happened market wide about a week ago or whatever it was. Now, and when I look at this, I'm thinking to myself, well, that's not there, but there is a pretty large influx of volume on this buyback up, and then the rest of it actually does look very similar, if not one-to-one. And one of the things I noted when I looked back in time was that, and this is maybe some of the key differences, is that there's not really a breach of the range. It's an advancement that's maybe about a 50% retracement from this whole drop back up. There's no breach of the range, and we do have a lot of that overlap going on right now where we are presently. But I talked about this quite at length at different times. And what I've said is that I think that what we're dealing with is iterative price action. And iterative price action is actually fairly straightforward. It's sort of the idea of it is it's a copy paste, but it's happening within itself. So you're creating a structure within a structure. And so the idea of that is that, of course, the smaller structure builds out into the larger. And I've been talking for, I don't know how long, 2 years. It feels like a long time. It's been since 2024 at least. So at least a year, back in January of 2024, I was talking about this structure that I see as kind of the main structure. It's the one we see the most often on AMC, and it's this guy. I'm just doodling it right here. And what happens is that after it kind of finishes, it goes into like a buy-up mode, right? And it could be bearish, it could be bullish. There's two different ways this thing goes, but most often what happens is that we end up retracing. I'm doing a very short version of this. We end up retracing back to the initial LSPY level, and roughly it's a 50% retracement on the bigger drawdown. It can be a breakout after that point and kind of go really high. Like you could end up going above even the previous high, or it could be a distribution at that point and you could end up coming back down and kind of falling indefinitely. And that's what we've come to know as the cat ears. But it all sort of builds out on two main platforms. And one is the initial preliminary supports coming down where the buyers are trying to stop the advance of the bears. And then ultimately, like the breakdown that happens later ends up being a pretty critical component of this as well. And what I've argued for about a while now, I mean, really since we came down here, again, maybe about a year, is that I don't think, and even before then, I don't think that we're likely going to see back up top. Maybe we'll hit $36 to $50, but I don't think we're going to hit that until February 2026. And for the last year or so, I've turned a lot of people away, I think, from our stream and from our channel here because of that. Because I've largely said, look, I don't think we're going to, they're like, when are we going to go up? And I'm like, probably by 2026. And, when you say that in the middle of 2024, you're talking about 2-year cycle. People are like, well, that sounds like garbage. And I said, I thought at that time, we probably are going to do this again, but smaller. And I was imagining it would happen earlier. We'd hit 14 and then come back down to 2. It ended up going to 2 and then 14 and then back down to 2s, right? So where we are now is 266. It's right back where we were. In arguably even in some ways lower because we're kind of consolidating here now right beneath the level we consolidated before. I think that's very important. And I don't want to go into heavy detail necessarily beyond that point, but I'm just going to say like that makes sense to me because if you look at this as a shrinking iteration, and this is what happened in 2020, by the way, where you had the whole iteration, which was a big old distributive looking cat ear, which was going into a double bottom, generate a new bottom that was essentially the exact same thing. And it did it again. It did it like 3 times, right? And those, to our naked eye, kind of just look like backups. They just look like backups to a range or backups to check liquidity. There's a lot of other fun things you can do other than trying to talk about iterations, right? But the big picture here was that my expectation was that essentially you're going to hit this bottom. So let me draw it a different way. You're going to hit this bottom and somehow you're going to do kind of a similar motion here. And then this was kind of the big fear when we went up high back here. And I mentioned it very early on after hitting like 14 or 13 and then coming down, and I got out at like $10 or whatever. And when we came down, I said, there are models of this where it continues to break out, and it was back in July. And this is really interesting because July again is going to look really similar in some ways as a potential breakout zone, albeit it's a different kind of setup. But one of the things I was worried about was that you're going to basically have the exact same motif. But now looking back on it, we really have the same thing in multiple kind of layers here going on. And if you look at it carefully, then the next thing that should potentially happen is that you would have essentially like the exact same thing happen again, right? And you're looking backwards probably thinking, yeah, well, this is looking worse and worse because as this goes forward, it doesn't go as high. Well, no, it doesn't. What's fascinating to me about this is that, and this is the more me just being me kind of thing, a little bit OCD, a little bit fascinated with the way these charts are built. This setup right here is really the build out that you see all the time. And it's not always a pleasant thing. We got it back here during the shrinking iteration down here, went sideways and then dropped really hard. It's usually what you see between the cat ears, to be fair. And it's usually a combination of waveforms that are shrinking that are basically doing the same thing over and over. It makes sense if you think about it as an exploration of liquidity, that there would be kind of a repetition of the same thing over and over and over again until that range is exhausted. And so it shrinks not because of some magical formula necessarily, but because liquidity is lessening and lessening. And when you're done with that range and ready to move on, you move on. And I don't think it's that I don't really think it's that much more complicated than that. If it works, you can just keep doing the same thing over and over until it doesn't work, right? So if this works, them doing this massive upthrust and sliding it down to try to achieve new lows, if it works here, it likely works here as well, right? And so on and so forth. Well, I identified that this is indeed the case, and if you look very carefully, you can see there's a huge amount of similarity, especially when we're talking about these two levels here. I know I've got a messy chart, but just kind of focus on this idea of like, oh, there's a buy up right here. It's like an LSPY on the previous range. It's also kind of a prelim support. That is actually dropped later, right, before it kind of drops down and hooks. That's what we have looking backwards if you go back to where that Judge Zern decision is. And I've argued, I think quite successfully, that this is actually in preparation for the ape combination. I think it's too low. I think they're taking advantage of that idea, and it's technically too low. I think it should have been higher up. If ape hadn't been introduced, do I think it could have been the same thing but higher? Yeah. But I think it would have been back here. This would have been reacting off of 67, which at the time was probably like $8 or $9 or something like that. But it didn't. It went really low, and I think it's a result of the ape inclusion. And then after that, we can talk more about that if you want. But essentially, there's a chart shift that happened, and I think it was being baked in for the 12-month period from August 2022 till August 2023. It's almost to the day, right? A solid year. And I think they baked in that adjustment. But looking back on it, those are the typical levels that I see on the small scale that are at play. So there's really three here, if you look carefully. One is that LSPY, it's like a bear flag, basically. It goes back up to retest the previous range, okay? Then it drops down, goes pretty low, and you get this big reaction. And then after the accumulation's done, you head back up. You cross back into that range and you pass through it because you don't need to trade it again. This time they traded like right between the two and then pushed up. And then really the rest of this is kind of no-brainer. I mean, it looks like it's hooking essentially beneath it, unfortunately. And it had a breakout moment. It just didn't last. It was a head fake, essentially. Okay. These up thrusts that you see happening, though, are iterative shrinking, and they do lead to more downside. And what I'm noticing right now is we're essentially playing out the exact same thing on like a micro level. And this makes sense because we did the same thing in 2020 before the bigger, gigantic moves, right? Eventually, you'd say, well, this couldn't go on forever, right? Well, no. I mean, it's either going to go to like zero, which doesn't seem very likely if the company's still alive and making money, assuming that they debt restructure at some point properly, I don't think they're going to go to zero, but they would essentially have another iteration about to happen because we've already had the push up and then the knockback down. And I'm looking at this structure and I'm like, yeah, it's essentially the same. This is not a really proper LSPY. I've talked about this before. It is a hook. It has a creek drop here back in October, and then we end up coming back up again in December. LSPY really would be, in my opinion, a little bit lower, but I think based on where it had created supports, most of the supports were quite high. They were at like 430 up to 460, and we had talked about those supports. So yeah, that was, coming back up into that range. And then it drops through. This is essentially the same thing that we see on the walk down back here at the Judge Zern decision. If you look carefully and you're understanding like, okay, that's the middle of this giant move, This is essentially just a rejection off that middle, right? And that was the breakout move that pushed you back up to retest levels that you came down from. And I think that on the big picture, it's kind of hard to maybe see the one-to-one exactly. You can kind of see the general pattern is there, right? Maybe hard to identify those particular points. So here's what I'm getting at, okay? I've been concerned and been thinking about how like we didn't come back up high enough. We didn't make that retest. This reminds me almost exactly of what happened back here. And I know that some of you guys are going to remember this. You've been around for a little while. But when we came back down here, I figured it was going to go to 6. I had fears that it was going to just distribute again and be kind of like what happened in December of 2021, where it came up and then dropped down into January, right? Which is actually kind of close to the same time period that this happened. And then it looked like it could have been a spring, but it wasn't, right? So at the time I was like, well, this may end up coming down and then breaking back out, going to 14 and then dropping all the way down low. And I had imagined, again, like kind of an exaggerated hook function here based on what I saw back here as like an accelerated kind of timeline of events that could happen, right? Now, we know that if you use other trajectories here, they actually point exactly to where it went if you use the 2 bottoms from back here. So I was jumping the gun quite a bit. And I think, again, that was part of the reason why when it got down there, I was like, oh, this is it. It's about to rip, and it's going to do something ridiculous that doesn't really make a lot of sense for a lot of people, but it never checked those levels, right? And I was bothered by that. When I look at what's going on right now, I can't help but feel like the same feeling. Like it made that reaction up, and then it came down lower. And instead of back here, when we were talking about, well, it could be this really quick kind of motion and have a change of character and go back up to 4. And we had even talked about it right here, like potentially having a change of character early and going up to 4 doesn't do it. Why does that seem so familiar? Well, on the one hand, you could say, well, maybe it's just because you got it wrong those 2 times. On the other hand, I think it's probable that that's actually the same because it's meant to look that way if you're looking for certain things. And ultimately, it doesn't do that. It goes down, and I've been talking about these because they're very clearly like the exact same thing over and over and over again in terms of these walk downs, 1, 2, 3, and now 4. So we've actually had like 4 of these things happen, and each time they've kind of dropped the price lower, and it looks really bad because you're like, well, then it looks like it's going to go parabolic, right? It's about to just dump off the face of the earth. If this is like the 5th one, it's just going to go straight down. That's true. It does look like it's going parabolic. But what I've noted, and I've said this several times, is that there's usually an outpouring that happens. Like there's a breakout that happens because these layers, if they have a change of character, and I think they will, they give up on going down. They don't get there. And I said the same thing back here. I remember certain people calling out like below 2 and stuff. And I said, I don't think it's going to go below 2. It's going to stop maybe at low 250s and then build out a support at mid to low 3s is what I said specifically. And the reason I said that is because when you get to this acceleration, it looks like it's just going to keep going, right? But there's no liquidity check that's happened back up top. Why would you do this, right? Well, we know that the reason an operator might do this is because it works. It's confusing to some people why this came so high, but I don't see it as confusing at all because I'm thinking about the model that they've used thus far. And this is very consistent with what's been used thus far. It is. Having like a massive squeeze move, right, brings in a huge amount of volume. People think it's changing. It's going to do something really new. They've already done it twice, maybe more, right? They've done this repeatedly, right, throughout the AMC history, the whole chart. There's so many times this move has happened. And it's a strange move, but if you think about it in terms of covering the positions of the walk down, then it's a way of almost like doing an accumulation and a short at the same time, like a falling accumulation to some degree while shorting, and then basically resetting it all lower and doing it again lower so you're basically compressing it down, We talk about that basketball pushing below the water. It's the same idea. And so you're alleviating that pressure and then pressing it down again, and you're doing it over and over again. And I think the levels that were hit were very consistent with what was the expectations in terms of the waveform analysis and so on and so forth. So I've said it before, and I'll keep saying it, and it may end up being wrong. I mean, there are times where it just doesn't go there. It's not very often, but there are times where it just doesn't go there. But this particular setup, I was waiting for it to go back and retest some of the floors, and it never happened. And I watched it iterate 1, 2, 3, now 4 times, and I'm like, it's kind of exactly like what happened here, if not exactly the same. So my expectation is not that this is going to shoot to the moon. It may make you think, well, if that's the floor at 239, it's just going to shoot to the moon, right? If it's just going to keep compressing down until it gets right there and then it's going to rocket. Well, although that could happen, I think it's very unlikely. And what I said last couple weeks ago, I guess it must have been back in like end of March, because it was like right after this started dropping. So maybe April 1st or something. As I said, I thought it would come down, but it wouldn't break new lows. And I had people, obviously you disagree, you said, oh, I think it's going to double bottom or go lower. I'm going to stick to my guns about that. I don't think it's necessarily going to go low. And the reason for that is because this is now an anchor point for a double flush, like a pump to the upside with a flush to the downside. And I've been, in my time here streaming, been talking about what I think is a highly probable setup, that you haven't actually gotten an on-balance volume hike on the 4-hour that amounts to a real serious buy-in since December. And I think you need to have one in the month or two prior to this big move, because there needs to be like kind of a final buy-in and then a final short covering. And it needs to look really bad. And right now, yeah, like you're saying, well, the market's already bad. You could just keep going. I mean, why? If you have enough sellers, you could keep going. It is a thought that I'm thinking about. I mean, I'm thinking about like how, well, if the market continues to be sour, then certainly why bother going up? You don't need to get more sellers enlisted. You don't need to cover short positions necessarily. But then I think about how in Wyckoff, you never just go straight down into a spring. There's always a push up before you come back down. And I don't think that this is it. And I don't think that this is really it either. I think this is like the initial push up that's meant to kind of drive the price low, but I don't ultimately think that that's the big picture. When we look at that push up and we look at where it came down to as a low, you can see that the midpoint has already been defined. Now I'm kind of eyeballing it. And you're like, well, that's not very technical of you, is it? No, but I think that's really consistent with what we see in the 2020 model. If you look at the overall picture there, and you look at that initial upthrust that happened, the 2 upthrusts that happened, the second one that iterates, the major iteration here, is essentially just a retracement, a 50% retracement, right, of this drop down. I mean, it's slightly different. Let me see if I can move it correctly. Let me get this like text out of the way. Oopsie. Classic Booksy. Too much crap on your charts. Can't even read your own chart. I genuinely think this is essentially the same thing. And when this comes back up, it comes pretty darn high, right? I want to talk about this on-balance volume problem, because some folks, I know that we've talked about it a little bit, but I've been trying to stress, like, I don't think this has happened yet. And when you look at the 2 on-balance volumes, especially side by side, which I'm not going to do right now in this video, that you're welcome to go back and forth as you want after the fact, if you want to scrub through it. I think we are in this position right here where we've kind of made, maybe even here to some degree, but I think this is a better one, or maybe even down bottom. We're starting to make like a bottom that builds out. It looks just like essentially what happens over here in terms of the breakout, right? But when it goes, it ends up really bringing in a huge amount of volume. And I do see people often kind of ignoring this part of the chart. It's like they see that volume spike that happened over here, and it definitely eclipses. You can see that the volume is like gone now. It doesn't even look like it's there because there's so much. But if you look before that June buy up that happened, there's a huge hike in volume, and the on balance volume like skyrockets. And looking at this, going backwards, you can see that the cat ears that were developed up top on the very first setup, if you're looking at on balance volume, that's the support, that's the resistance. Look at where that direction goes. This is very much what we see in the overall build out on AMC as well, like when in GME for that matter, is that often these are associated with a kind of a trend breakdown, that you're kind of having support on a trend and then you're losing that trend. I call it like a creek cross or cross creek, because it's going across. It's not completely bearish, it's not completely bullish, but it's dependent on direction, right? And there's more than one, okay? And in this case, this one has another one that's coming down quite steep, and you can see that creek eventually is met there, right? And so on and so forth. So here's what I'm suggesting, okay? When you look at this particular setup, you can see that the original, the on balance volume that's sought after, the one that we go back to in the beginning, ultimately is built on this trend that has some interaction, though there's not a ton of it, but it's built on this kind of parallel trend coming down, right? And every time we kind of come down, we're trying to get back to that. This ends up being the anchor at which we finally get it. Now, what's weird, if you look at this, is you can see that the on balance volume, sorry, I'm trying to like frame it correctly. You can see that the on balance volume doesn't have enough strength here to get back. So it's actually running like away from that trend. So the on balance volume is like hiking up. It's elevated right here above those trends. I'm hoping that when I finish this little blurb right here, you're going to have like an aha moment. This upthrust then becomes a huge buy-in / short opportunity, and you can see that that ends up driving the price back down. And ultimately, this is where the on balance volume frankly tanks and comes back to that level that it hadn't gotten back to since on the price action, right? Not regularly, since at this point it was before the COVID drop in February 2020 and then also April 2020, right? And that's where that buy up happens, and then it goes sideways here, so on and so forth. And arguably, again, there's a couple points of interest, but you would look at this zone, and you can see the connection there going across the chart as to where that's trying to get to by the time it hits the bottom and goes into a spring. All right, so what of it? Well, it's also important to note that while there's no obvious, at least from what I'm seeing right here, I don't see like an obvious perfect sign of weakness except for this right here. And this sign of weakness happens after the peak, and then it comes down, it makes a new low. And that would suggest to you that it's probably going to come down and try to go back to the floor. Just that right there at some point, okay? Notice that again, isn't perfectly in line with what we see, but it's pretty darn close. This is pretty darn close. Again, not perfectly in line, but pretty close. If I were to pick one, I would have picked this point from May down to here. I think that would have been fairly light. It would not have looked like it interacted too much. And then I would have picked this guy going down, and that would have had also some interactions. All right, now fast forward to where we are now. I'm talking about the sign of weakness, if you're wondering what I'm talking about. Okay, fast forward to where we are now. And when you look at the chart, I know this chart's a hot mess, okay? And actually what I'll do is I'll turn off the drawings for just a second so you guys can see better. All right, I'm not going to be able to show you drawings down here though, so just keep that in mind. But you can see that this trend coming down, this blue marker, see this blue marker that I've got? The interactions that take place here are correlating to what we see in three zones of high interest. One is September 26th, right? So this is right after that big drop. There's this big reaction back up to like 19.5 million on balance volume, okay? But weirdly, it's kind of happening as this volume is like doing this crazy zigzag here. It has this big spike, but it's not going anywhere really when that happens. And then it consolidates, builds back out. That's where it breaks down again here. So the price action actually dropped lower right? But if you look, the on balance volume was much the same. So there's an inverse relationship right here that's going on with on balance volume and price action. The price is coming down, but the on balance volume is staying really elevated. So then we move really far away from it. And when we get that big reaction, notice where the market comes back to retest. But again, there's this disconnect between the price and the on balance volume. These are not in a straight line, are they? No, they're actually coming down, but they're very consistent. Very consistent. So in this case, it's essentially like a one-to-one example with what happened in 2020, where you get this divergence at the bottom here. There's a big breakout, and then it comes back down. And then notice that the next time it tries to get there, which is almost immediately, it tries to come back down in June, it stays elevated. And then even though the price right here is at 406, which is essentially like the same spot, this is 412. Notice how elevated it is again. It's staying up, staying higher. So what do? Well, they can't get it to go any lower, so they take it up to this really high push, right? They kind of fake out the market. They take it up and they press really high, and then they drop it back down. And again, it's kind of like this swing around that 409 level to try to get it lower. But note that it doesn't actually come very low at all. So my theory at first was that this was like almost done, and that you basically have like a cat ear here and then a cat ear here. And I had thought that maybe right here, which was closer to earnings, you'd get that breakout in on balance volume, and it would sort of head back up and then have this big, massive moment. But then it iterated again, and this is when we have the tariff stuff going on. So instead of kind of stopping short of going really low, they just do another iteration. The price comes down, probably because they were able to achieve selling pressure pretty easily. There's no change of character, even though there was. It technically broke the creek here, which is kind of weird, right? Oh, yeah, it did. Yeah, it did. It broke the creek. So there was a chance, but it obviously doesn't work out, probably again because of what's going on with our president's administration. And so we have in the shakeup of the world economy, right, you have another drive down. And now you have another opportunity for another drive down. And you're like, well, what's stopping them? Why even bother going up? Again, look at how elevated we are. It is not impossible that this could have some kind of a massive drive down, but it's almost exactly like what we saw in 2020, where there's no clear hike in on balance volume that's occurred. Like we've got a mild hike right here lately, and it did kind of come back up and retest. And so my idea was, I'm not 100% positive this is going to work out, right? Some of the differences are kind of obvious if you're staring at the chart with me right now. One is like, you're like, well, that doesn't really look divergent. It kind of looks like it's still going down. Whereas back here, we had that divergence on the 4 hour, it's kind of obvious. No, it wasn't divergent anyways. It just kind of was up, right? Because this is all going up. So we're kind of missing parts of it, So you might be saying to yourself, well, are you sure that this is not going to just drop one more time? I'm not 100%. But I also think this is happening on such a small scale that at this point, it may be better to even look at like a 2 hour or something and see how it compares. I'm not doing that because I really want to stick to this 4 hour time frame and up. I don't want to go significantly low. But sure, like you could make the argument that it's not quite the same. Could also be that this is not done, and this is what I think, it's not actually done iterating, that there's more to come. And so I was looking at this and I was thinking about all the things that I'm like kind of thinking about right now. I'm like, well, we missed out on all this stuff. There's just some weird stuff that happened that we just didn't quite check certain levels. We never got back up to these markers that we dropped from around 4. That would be the retest on the major. It's just a strange thing to leave behind, right? It's a really odd thing to leave behind, all these levels. Some of them were checked, but then some are really clearly not, right? And one is like the 405, but even beyond that, I would suggest to you that it's right here at like 395. That seems highly likely. And it's not just because there's a gap there. It's because of the support that was there, though temporarily, never goes back, never checks it. It's a very odd thing to do. to just kind of leave that open. And it's really similar to what I saw in the big picture when this thing rocketed to $14. It's like they just kind of left certain things for whatever reason, and then they do the build out down until they can't, right? Until that's done, and then they need the liquidity. So I'm looking at this now, and I've been talking about how I think it's missing. Well, you could be wrong, right? It could be this, and this is enough. And I mean, it's possible, but I'll tell you right now, there's no way in in looking at this to interpret it as it's come down far enough. You can't even begin to interpret that way unless you think that this is the support, this 31.5 is the support that's trying to be hit. Then you could make an argument, well, it's supposed to be hitting this support, and that's that. It's not going to go any lower. Sure. Oh, this is like a SOS. This is like a spring, and it's just going to go after this. Maybe. I don't see it as consistent with what I saw in 2020, which is really like where the drop-in happens. It builds out a like a central range. And for me, it has to be at least 18.7. And we're not there yet. Not surprisingly, if you look at the cross trend here, same thing we were looking at on the 2020 model. This is the original downtrend right here after that buy up. This is not pointing to the same place as it is in price action. In price action, it looks quite high. You can see that the build out actually looks like we're sitting right underneath it right here. Essentially, we're compressing right underneath it right now. And we look like we're way above it on balance volume. That's completely backwards, right? Like we're floating 10 million plus above it or whatever, or 10 million, about 10 million above it here on balance volume, but we're beneath it on price action. I think it's a big part of what we're going to see is this imbalance that's happening is going to be corrected. And when I look at this big picture, I still don't see, it's not impossible that this is going to do what happened during that Judge Zern thing and kind of flatten out, have like a single day of like up and then just down after. And that's kind of what I'm imagining, to be honest. But I think that it's missing the ear. And this to me looks like another iteration of what I would call cat ears right here. Like it hasn't finished. It's just still doing the same thing over and over again. Okay? So in looking at that and what's missing, what seems to be missing here is a back test that comes up to at least the 385 level. I think at highest, it could come all the way up to, and I have this kind of off to the side a little bit, but at the highest, I think it could come up all the way to 460, and there's a lot of reasons for that. It's a strange level to pick out, but it has to do with this particular drop not coming back to 460, and that was a really important, super important support level that we had, and we never tested it on the way down. Now, could that be something that we hit later? Sure. But I'm like looking over here over my shoulder, and I'm like looking at this overall picture, and there's another massive trend here that hasn't been checked. And if you go back and you look at the gap levels here where the split happened, you take those parallels and they're consistent all the way back. It's essentially like the original support coming down, right? And there's this, I wouldn't call it necessarily a creek, maybe like a cross, because it's essentially coming across that and then hooking back up. We tested it once, and that was in May. We haven't tested it since. There's been no back tests on it at all, even in this pump here. This was part of the reason I thought it was going to come to $8 back in this range, was because it would come back up and check that level again, and it hasn't tested it. If you're going to do a big up thrust like you did here, and they checked it here, there is a possibility they're going to check it again back here. But I got to tell you, it's pretty low. You know, ultimately, it represents a different kind of a back test, but it would essentially be going backwards to 460 in my opinion. And I think that's about as high as I would take it. I don't think you need to go any higher. The cool thing is that there's actually a triangulation there. There's a build out on this double bottom. When we made that double bottom, if you look at the first support and then the second support, which was on the double bottom, so not the low, because that was the selling climax, but then the support we built, then there's a double bottom. If you look at that second support, it actually intersects the 462 mark right over here on May 15th. It's very consistent with the timeline that we saw last time, where there's this early pump, you know, and then it checks into specific levels by the 16th, and it hits some of these levels pretty fast, right? obviously. I could definitely see this as being quite simply very one-to-one, oddly enough. And again, you might be saying, well, I don't get it. Why would you go all the way up there and then not come back and then come back down? Some people are going to say, well, the 200 moving average is here somewhere, and you can't leave that and expect to. I don't agree with that, first of all, because a lot of times these moving averages, people will say like, well, you can't jump over that moving average. You're going to advance. Well, look, this is the 180, all right, EMA. The 200 is a little bit more like volatile, the SMA. I don't have it on here, but like this is the 180 on the 4-hour. It has breached this quite often. In fact, if you look at this up thrust, it actually looks like a 50-50 almost. It goes way beyond it. And every time it's gone beyond it, it's basically been in distribution mode. It's been used as a way of, I don't want to say tricking retail, but it kind of generates a squeeze that allows them to bring it up and then kind of reset positions and take it back down. The only time we see this being bullish on this chart is here. And that's it. So a lot of people will say, well, you can't go up that high. You can't go to 460. It'll break out. It'll just keep going. I don't agree with that at all. I think that's nonsense. And I don't even see it as remotely consistent with what the chart says. When like basically 90% of the time, 9 out of 10 times, it's not been that way. It's been used as a distribution marker. So in fact, in some ways, coming up to like 460 here, right, which isn't even that high above it, it just looks like a back test of liquidity on this area. And then you could drive the price right back down to 330. And what's interesting about 330, if you guys remember this number, I groaned about it quite a bit in the Discord group, is that 330 is actually where we chopped along here. We generated, right after earnings, we generated like this really long-winded structure. It felt like nothing was happening for days. And it was constantly bonking its head on like 335. And that needed to be the breakout zone. It never did. That's right across now from where that 180 is. It's a perfect triangulation. So for me to suggest that this thing goes all the way up to like at least 395, which isn't even that high. That's just slightly above these guys. That'd be like the minimum, right? Or 385, like the bare minimum. Versus going up to like 460. That's a pretty big range, Booksy. I know. But I think that all of that area from 395 to 460 is essentially like a sell zone. And I think that people, they would allow it to FOMO from that range, right? It would be an apparent breakout here. This is right above the 180. It'd be apparent breakout here. They would just let it FOMO up and then pull it back down and trap it right underneath this level that they created right around 330. And that essentially creates like a perfect opportunity to then, again, have this on-balance volume hike, right? Have this on-balance volume hike here and then drive the price back down through the floor and finally get back to that blue zone, which at which point would be very, very low. Now, I've talked about this at different times in different ways. I've said, well, I think it could go up and then come right back down, into May. That's like a really fast example. Like it pumps up and just slides all the way back down into May, and then it just squeezes, right? And you get this big June move. More and more and more, I've been kind of leaning towards this other one, which is it doesn't actually go anywhere until July. I think there's a mix-up. And then I think that later, I don't know why it's appearing this way, it just is. It's like a month off. And that actually lines up really well with this idea of the late February 2026, March 2026. It's also a month off. It's not quite right? It's like, why not January, Booksy? I don't know, because it's not January. Like, I don't make the chart. I'm just trying to interpret it. If it looked like it was exactly January, I would say it's exactly January. But it's not. It just isn't. Is it possible that these triangulations are just estimations? Of course it is. They could be off by a bit. And sometimes you do get there before the triangulation does. It happens all the time. So I don't want to say like it couldn't be that this is just way too long-winded, but really this is like ideal. I mean, it's very tight, the structure, and it builds out in a way that makes perfect sense because the original creek here, which was breached once, twice, and we're retesting it right now. That's really important. That's a hugely important point that I haven't really even gotten to, but this very first creek that we made from December, I should say it's not the first and only, but it's the one that I'm looking at right now on these iterations down, from December 6th down to February 18th. Remember how I said we had like kind of a false break? Well, guess what? During that recent squeeze motion, we actually broke out. That's where you see a hike in volume here. And guess where we are right now? Like right now. We're kind of building out right on top of it at 265. I went back and I decided I should try to do as best I can kind of a one-to-one comparison, and it is consistent with what we see. It's not exactly the same, but it's very consistent with what we see last April, albeit this is setting up a little bit lower and more flat, right? It's very consistent in most regards. If you look at this as the buying climax, then ultimately not like this is, and then you've got like this big backup. It's an auto reaction and a phase B top essentially. Then you can see this as a really simple, like, all right, we're backing up to try to create a bottom right now. We generate that bottom. We could end up coming back down quite low, and I've got it kind of up high here. We could end up coming back down quite low because of how low this is setting up. But it's ultimately been very, very consistent with what we saw in last year at this time, I should say, so 2024. And what's interesting again is that even though it's not perfectly the same, it's essentially the same exact setup. And what happened in 2024 is that after it made a bottom, it dropped the LSPY level, which is right here, which you can see pretty clearly, even though my charts are messy. You can definitely see that level because there's this massive green bar that comes up and retests it, and it's essentially just testing the first floor. When this big, red bar comes down, the selling volume comes down, max selling volume. Then there's these weaknesses, right? They're pushing through, up thrust, and then they come back up. They check it and then dumps. That level is $2.76. Okay, $2.76. Now the expectation here would be that over the next week and a half or so, that this would essentially build back out to that level. Well, what if it's lower? Well, it doesn't really matter, all right, that much. But what I would say this is that what's interesting is that if you look at the current setup, and I'll keep going on this, and you look at the bottom to top here, it's actually pointing towards that 276 right on May 2nd. Why is that important? Because that's where our earnings is, right, going into that Monday, May 5th. Last year, it was the exact same way. It had an earnings drop, and then the following Monday, it took off. I don't know how to be any more blunt about it, but depending on how this sets up, I genuinely think that essentially the big picture, which we looked at extensively, where the 4-hour needs this big OBV hike, where we haven't made this major backup, where we might even go to 460, the big picture is really beginning to show some serious footprints and signs that we need to make this kind of big move. And this small picture is definitely showing a pretty massive reaction off of a potential bottom, but it's not the bottom that, in my opinion, your operators want. So what's left, Booksy? Well, what's left is to do a fake out, like a massive fake out. Like this is kind of like one that a lot of people are saying, well, it's already done it. It's faked out. It's going to come back down. Wasn't that it? Wasn't that the trap? Yeah, it's an early form of a trap for sure. One that I kind of fell for even because I was thinking there could be an earlier buy-in right here. It didn't happen, right? But ultimately, what's even crazier about it is I went back and I looked at the setup, and in 2024, after the buying climax happened, there's a trend setup where there's a hook, and that trend setup ends up being the build out for what later becomes like the cat ears directionally. Well, I looked at the timing of this and I was like, okay, so if this hits this hits that, it could be a little off. I mean, certainly that's a possibility. I could be off by, I could be off by like a month, in some ways, because if we end up having that June squeeze that everyone talks about, it could end up being that's the motion instead. That would kind of stink. But I'm really defaulting to what I saw last year, because last year it wasn't a June run-up. It was a May. move. And ultimately, by May 15th, it had already kind of reset back to where we see the cat ears begin to form, where the distribution starts happening. Looking at that timeline, May 15th, if you go to May 15th and you look at this trend, on May 15th, this is sitting right at 335. Wait, didn't you just say like that was like a really key level? Yeah. And it's not just key because we sat there at earnings. Obviously, that's important. It's really also key because there's a number of correlations to larger scale breakouts there. And this is the one thing that really stood out to me was if you look at all these parallels and use the blue as like the bottom, this white one is kind of the penultimate right now. That's the one I would have expected this to come back to on like a wave from December back up, and it never did. But notice right where that's at going into May, it's right here at 335. It's intersecting the same point and triangulating. So we've got kind of a triple triangulation right now. We've got the level that was built out and then the iterations that continued down right off that liquidity shelf that we sat at for a while, right? That looked like a bottom at first and then it wasn't. And then we've got the parallel structure coming down. Notice the upthrust that happened above here. If you take that same measurement and measure it up here, it gets you to at least $4, right? And that parallel structure is built right on what's currently looking like the bull trend. That's the same trend that was used again in 2024. I'm not going to flip back and forth and show you those, but you can go look at them, okay, if you want. Oh, well then what else happened? Well, what else happened is that we actually did make another advancement of the creek. Well, where's the creek right now, Booksy? This is the interesting thing. Back on Thursday, well, there's a lot of interesting things. I don't know. I keep saying that. I'll do this. Back on Thursday, we actually had built out already like a directional trend. It was pretty strong. There's a wave, and then we're probably going to do another one right here. That's kind of small. And when this wave reacts, my expectation is it'll come across, may even come down lower. I'm not sure if that matters too much. And then once it reacts off this bottom, we should see it kind of go back out. This particular trajectory right here, right, which is 60 degrees, I've kind of replicated it a couple different times, and they don't look right at the moment, but they were correct when I did them. I probably did them in like 15-minute time frame or something. These reactions, when you look at them and you triangulate it, suggest that this would be coming back up by Monday. So it may take us some time. We may not see a lot of green this week till mid to late week. And there's a good reason for that. And it's called Google and Tesla, who have their earnings. And then SPY, which looks like it's dumping off the face of the earth, has a really similar setup, albeit it's a little bit different for a couple reasons, because SPY is extremely steep in some regards, whereas AMC is not in some regards. When you look at those triangulations with what we see on a horizontal basis, this makes a lot of sense because you would be coming back up by next Monday, right, to this like 289, 290 area. You don't have to push very hard to get above the creek. And I actually have it only coming up to like 293 in this example. I think it could come back even lower. It could be over here and push to like 289. It'd still be pushing the creek up, right? So you can take it really literally or not. That's up to you. But basically, you'd be coming up by this period of time and then probably coming back down. All right. Now, depending on what happens after that, could there be a misleading kind of thing where this goes the opposite way? Sure. But on the whole, my expectation is that even if this comes down below and it ends up building out a new spring bottom, which could be quite low, you know, it may end up being like this 260 something level, which is currently being targeted, 262. It could end up being like that it hits 261 or something like that. Kind of resets maybe even this guy, this initial spring up. That'd be very different from what happened in April for sure, but absolutely possible that that's the same setup depending on what happens here. So what I did is I generated not right now. Then go get some, there's ointment in there.
Where?
In the box. You know where it is.
I looked in the box.
Well, look again, because anti-itch cream. So if this generates the same thing, which I think that it will, you're going to have a really good chance, in my opinion, that this could set up very close to the May earnings and essentially break out the following Monday. And I'm looking at a pretty decent sized move. Depends on obviously where it starts. I don't think it has to be as low as this is. Could be an LPS in a localized spring. And what that means is like an LPS with a localized spring would probably look like this, where it would like chop. And then the localized spring would drop beneath like 268 or something, right? But what we want to see is we want to see these layers build out and start to retest essentially the, and this actually would be quite perfect because this would check the second one. It would look really bad because it would look like a hook that dropped down, but it actually could be like a spring. It goes back down to 260 something, and that would be really solid actually for a place to move from. So we're looking at a pretty big move potentially. Now, a lot of people are going to say, well, I mean, you know, we talk about these big moves and they don't happen and it's bummer. Yeah, but just to be fair, like I haven't called for that many huge moves. Like people might accuse me of doing that, but that's not actually true. Because most of the time there's more than one option on the table and you really have to wait for confirmation. And people just don't wait for confirmation. They just want to like know right away. And so they hear one thing and then they decide, okay, he's bullish. And then they don't hear anything else you say. But in reality, like most of the situations that we've had in the last year really haven't been like an all-in situation. There's always been a problem zone. There's always been the risk of distribution. And we've watched them turn from bullish to bearish, you know, in a matter of a candle. And I've always been there to try to call it out and say, yeah, this is not looking good, you know, and you're not going to get the confirmation until the last minute anyways. So right now, is there confirmation that this is going to happen? No, there's not. But another thing I wanted to note is that the triangulations here are definitely pinpointing very, very, very high. And they look really solid to me. When you go back and you look at where these triangulations are taking place, they suggest pivoting around the 30th, which means that would be like a low point. Potentially, which is correct. That's exactly where you want it to be. But then this one as well, this extension, the first bottom extension here, which is the first two lows, obviously this is lower. We know it is. It broke down already. That hook is also present last April, and it does point, again, ultimately to where that intersection does happen. It goes beyond it, right? In April, it actually went past it and then came back down through it, but it does present itself as a really solid, like rock solid triangulation back in April. And I will show you this one if you want to see one in action. Actually, yeah, this one actually goes all the way up, way past it. So this is the triangulation right here. It comes up and it intersects right there at 592, which ends up being the ceiling for that range. Right here ends up being like the ultimately like where are we going kind of point is right there. So these are the triangulations that I'm looking at right now, presently on our current time frame, and they're pointing to those zones that we just described like minutes ago. Like that triangulation is pretty evident right now, and what we're doing is we're generating a downward motion back towards some of the first buy-in zones right here. This is where that first big motion happened. Ours just happens to be very low and flat right now, so it looks a little different on AMC because it's very low. The first big buy-in motion, the support was down here at 262. Not surprisingly, again, that's where we are now, and is where we're jumping over the creek here and intercepting. Which means if we bounce out, all we have to do now is support on the last creek, and we have an opportunity to break out. And I do think it's probably going to be kind of one of those same motions, to be honest. I think it's going to be a really nasty upthrust, and I do mean upthrust. I don't think it's going to be a squeeze that lasts. It's going to be a couple days maybe at most. Just like last time, it was there and gone before you could blink. You're likely going to see it kind of go from 265 and just kind of gap up to 284, drive the price back down, and then just rock it. And that's assuming a lot of things. It is. that it's actually going to do this. But if it fulfills what it's currently triangulating, it seems pretty obvious it's going to be heading up towards at least the $4 mark, right? And you're like, well, yeah, but then you said that ends up being the top. You're right, it does. So it's possible, again, maybe it goes even sooner than that. I don't really know. But all I can tell you is that right now that looks like more likely to happen again right after earnings, going into like that May 5th through May 9th week. And that makes sense. It's consistent with what we see. Could we actually have a build out that goes way high, goes up to $5, and it comes down and it sits underneath $4? You know, sure. I mean, obviously that would be a bit different, but it could happen, I suppose. And in some ways that might make more sense because they may need to get more liquidity, right, from people that are like, oh, it's going to go to the moon. And so they're looking for it to go to the moon. And in reality, it's probably already broken down from whatever trend it's on, but it's doing so really high up back around the 4 level. So would that be a possibility to like come back up and redistribute here? Yes, that is what happened in 2020 when that cat ear finished, is it had this big push up and then it reset. But right now the model is not to kind of keep it super high. So I'm using the current model, which goes to last year's move, as opposed to the model from 2020, which was a little different. It was more highly elevated. This one was much flatter. What about the low lows? Is that consistent with what you would expect? Yes. Timing is a speculative thing, but absolutely if it hits 460 and then you do a 50-50 down to the bottom here, which is where we think that it probably goes for OBV purposes, that's the $1.80 range. It's a really solid range that a lot of people have called out. I agree that that could be the range. It does work. It is consistent with what we see here. Could there be a faster version that doesn't go as low? Sure. But there's definitely not really a huge amount of space for anything that doesn't come that low, unfortunately, because I think that's the big goal here, is to try to drive the price back down. Well, Bugsy, I mean, that's just one idea. There's probably more than one, sure. But I'm going to present you with what I've got, what I think is the strongest, and this is what I've got. What if it doesn't go that high? What if it only goes up to 350 or it only goes up to 360? I think it's possible. I don't think it's out of the question that this could, again, have a faster acceleration. In which case, yeah, we'd be looking probably at like a June squeeze as opposed to a July squeeze. I'm not going to go into other reasons why July makes sense. I don't want to get into that right now. Some of you guys are going to point out that the 90-day thing is in July. Believe it or not, it's not the reason that I picked July. It was actually based on some other technical setup things like this in 2020, this buy-in, and there's a couple different spots, but this buy-in specifically, if I'm reading it correctly, is actually the middle. And that implies that the wave does still end in March, but what it implies is like the difference here was like a month off. It shifts it over. So there's a bit of dynamic to that, and I don't want to get too more into detail. We've been going for about an hour, so that's a lot. What about the S&P 500? Well, I did the same thing on the S&P 500, but I used its own iterations here. So it's done the same thing 1, 2, and then perhaps 3 times. This build out right here is extremely similar to the build out that happened in March, on March 20th. And when we first started the squeeze, one thing I pointed out was that the market seemed to be targeting the March 4th region. The March 4th region right here, if you look carefully, that March 4th region has every reason to be targeted. Not because there's like little gaps here or there, drop downs, although sure, like from an iteration standpoint there are. And there is, you know, some levels on some charts that go pretty darn high, like up to 590, for example. Some charts have gaps way up high up here. I get it. And they're big, important charts, right? Big guys in the market, part of the Magnificent Seven, for example. This to me represents the most likely floor from the all-time highs. This region around March 4th through the 10th is really the breakdown of that ceiling and that floor. There are other spots, you know, this is not the only one. So it's important to note, like, it's not all your eggs in one basket kind of thing. Another is like slightly lower, and that's at 564. What I noticed, and I think you guys will notice too, is that these are the hook levels. So weirdly enough, all of these levels have one thing in common, which is these are the levels that you have hook gaps down. So there's like 3 of them. One's at 590, one's at 575, one's at 564. They're essentially like markers of, let's call it like supply support, right? Resistance. When these things drop down, they have weaknesses, and then they come back up and they drop from these levels. Weaknesses, come back up, drop from these levels. Weaknesses, come back up, drop from these levels. That happened 3 times in a row as this thing widened outward. All of those represent important zones from this finishing of the bullish range up top. Okay, well, that in and of itself doesn't mean it has to happen now, right? It could happen a year from now. Correct. However, when you look at the big picture, there are a lot of things that, again, we would talk about with like triangulation that might represent some very significant, and I don't want you to focus too much on this big picture just yet, all right? But some very significant levels that are extremely important in the grand scheme of things. And when I look back at these trends, I'm like, okay, well, where were these things at? Where do these things kind of triangulate out? Some of them go pretty rapid fire, right? And some seem to take a really long time. Like this would suggest that you don't get there till way late May, June. Like you don't come back up here till May, June. But a lot of the charts that I've seen and a lot of the ones that I've been charting seem to suggest otherwise, that you actually come back up quite early. And there are things that have been left behind, again, on this widening that have pretty big questions, like question marks in my brain. So what I started to do is I started to look at what this as like a fake out move would do if it then came back up. And what I noted was that this did the same thing essentially back here. There was a buy-in off of a bottom. It wasn't nearly as strong as this, right? Wouldn't say that. There was a buy-in off the bottom, and it jumps the creek, and then it tries to advance. And what's weird is that this is actually the first, or I should say what's strange, and it is interesting, but it's more strange, is that this had actually developed a widening. This looked like it broke the widening, and then it drops through. It's a little bit in contrast with what we see here, unless you look carefully and you notice that when this first came down, again, the widening itself, this also broke the widening. This creates a pressure wall here, drops down, and then it breaks out on the widening. I don't know if you can see that very clearly. It wasn't much of a widening, but every time that we've come across here, we've actually widened this channel, and that signifies 2 things. One is that obviously the bulls are hungry to like not be in a bear trend, but 2, I think it also signifies time, because every time you come back up, there's an effort to try to advance the stock. The widening on the spread happens because of the volume expanding and people trying to get out of positions, and the volatility expanding, so on and so forth, because of the market conditions. That builds in time later, because if you had only done this original trend and it was somehow like just this tight, by the time you got down to 487, right, or 450 even, you don't have but like a couple months, and then you're going to have a breakout. And if it's that tight for that long, you're going to have like a massive breakout, right? Like a huge retracement. By widening it every so often, it generates these stop gaps. This generates these walls. There's a wall here, and then a press of that wall. And then there's a wall here, and then the press of that wall. And then again, wall here. Same exact kind of idea, right? We've generated like a new wall, and then we haven't pressed the wall yet. What makes you think it's going to go out there? Well, I'm not 1,000% sure that it's going to go like to a specific point, but I've noticed that there's a let's call it a consistent pattern. Let's just make it an easy term. A consistent pattern of like where this comes back to when we're backing up. And you can see consistently we're going back up to these drop zones to check. And the last drop zone we had was 565, and it has not come back up. So the wall is created before it gets to the drop zone target. It doesn't get there. It backs up, it forms a spring, right? It backs up, forms liquidity, right? And then it doesn't get there on the first go, right? There's an advancement, 1, 2, but then it backs up, creates a spring, and goes back to the top. I charted these out just to see if they made any sense. I was like, well, what's going on with the directional movement of the stock right now? And it makes sense. It actually looks like April 25th, going into the end of the month, going into early May. That could be a pivot. You could be down low here. So you might see this up and think, well, it's going to hit there by then. I got to warn you, it's very possible. It's not impossible. It's definitely possible this doesn't break out till then. This could be like a pivot low, because sometimes that happens on triangulations. But I will say that it's pretty consistent with what we think about with earnings season. We've got 2 of the big names, Google and Tesla, this week. Very consistent with what we see. That could be a potential reaction to that point almost makes too much sense to me. Whether or not it goes that high, I'm not sure. There's not really a way to chart this that sort of gives you like a perfect answer. If you go back and you look at, like I'm doing it right now, if you go back and you look at some of the other chart methods here, one would be to use a much less steep widening. This is more consistent, right? It doesn't have like the push out, the push out, the push out. This one seems very consistently like on point. But notice again, we would be going up to 557, which is where the gap is, and not quite making it, maybe to 565, but we would be heading up there at the very least. And if you look at the triangulations here of the directional movements currently in position, I would suggest that you could get there by the end of the week. So I think that we were not wrong in the initial assessment that this may end up having like a bigger push that goes to 5. There were 3 main targets, right? One was 565, one was 575, and the other was like 583. I've adjusted it to be, I think, the drop zone at 590. I think 583 is important because there's a gap there, but also because of that range. This is, I think, a big part of that target. I don't think that that's wrong. And when you look at the big picture and you do like a retracement, that's like a 618 retracement level on this big drop down. So it certainly makes sense as a backup point, and you could definitely have continuation. Okay. So what I'm suggesting is not that the S&P 500 necessarily goes to 600 plus, although I guess if it broke out here, it could, in theory, do that. But I had suggested on Friday that we watch this and see if it makes an SOW right here. I said if it ends up popping, we might get a pop up to maybe, I think I said 535. It never went there. So that means this stays really low, which widens it out a little bit more. So it could have been a little steeper, and that would have made it go a little faster over here on the triangulation. Instead, it's lower. Therefore, this triangulation is wider. The angle is wider, and therefore it doesn't hit those targets till later. All right. But the rest of this was exactly what I drew, like on Thursday, because I was thinking, well, you'd probably come back down and retest this point, and we'd have to see if there's a spring or if it hits a new low, and I still don't know what's what. It hasn't yet made a new low. There could be a new low, right? I mentioned that on AMC, it looked like there needed to be one more pop and then potentially a final drop. Maybe we'll see if that tests to try to go new lows right here. You should have some kind of reaction that looks bullish and then try to come back down. Maybe there's a change of character in that. I'm not going to try to call that out right this yet because it's a little bit too nitpicky and I don't really care that much, because I think that at this point it's already broken beneath this trend. And I noted that the same thing happened back here. You had elevated trends that were broken. Ultimately, when we look back at this, they're not one-to-one, right? They're just not. So you can't do like a perfect one-to-one comparison. There's a lot of similarities though in this build out. And ultimately, like what this is for is a liquidity grab, right? And if you look carefully, you can see that this is going across and trying to kind of recapture, really it should be like right there, that trend. But this ultimately points to where it drops down to later. It's kind of a bearish indication, right? of like, uh-oh, we're heading this direction after we come up and distribute, and there's a widening going on, so on and so forth. I think there's a similar story going on right now, and I'm not 100% on this, but I think there's a similar story going on right now. And I looked at the setup and I was like, well, could it be that this has already happened? It's already done. It's going to drop down super low. It's not impossible. But again, it never came and hit those levels that I expected it to hit. And I just found that to be really odd. So what's missing is it's missing that pump up to this zone right here. Again, there's probably two spots that I would be most interested in. One is like 556, the other's 565 right now. And that's probably as far as I'd take it for now. That this is basically creating like a bottom that's going to then break out. And it correlates to what we see with the earnings that are starting to build up. Now, what about the rest of this? It hasn't happened yet, so I can't say it will or won't happen. It's like right on the edge right now. If this drops down again, it creates and generates more than likely what's called an SOW. It's already done it here. So yeah, like a breakout's great, but that means that more than likely it's going to hook. And I would even put this a little bit higher, suggest that it does something like this, because it probably goes back up and feints towards the top again. Along this trend, which was already built out, and that's where that breakdown would be. But then you've also got a new one, right? And that's right here. So this actually popped below it. So at this point, we're now generating like a new point of interest. And this is what I was kind of expecting anyways. I don't have that line up, but I drew it out when I made it. Because you'd have a layup here that would have to then hold. And if it doesn't hold, it drops beneath it, distributes. It's essentially, again, pretty much one-to-one with what we experienced last time in this drop down. It'd be like this, basically. And that would lead to further pushes low. Now, what this does mean, of course, is that if I'm thinking about this correctly, is that some of these earnings and whatnot would be kind of misses, or they would be potentially bad, or that the market just wouldn't buy the news enough, so you'd end up selling off afterwards. A lot of this is speculation, so I don't want you to think like, oh, he's got it mapped out. He's going to be, eating his words later. I'm okay to change this if it changes. I do think that 450 is a big target for bears. I don't know if we're going to get there, right? But what I can tell you is that there's a lot of consistency with the idea that this could rise into May or June, but then still have downside afterwards. So I am looking for a potentially like bullish setup here. This one kind of made really interesting to me is if you have this kind of secondary buy up, it becomes a really large kind of cattier setup, if you will. I think it's possible. And then you have the remainder. Could it ever become bullish again? Yes. If for example, when it comes back down, this is recaptured at some point or held, then yeah, it could be bullish again. But right now, all that we've done is managed to break through the only trend that we had, which typically means that there's an SOW in play. And my opinion is that it's a sign of weakness. It's not going to immediately drop off the face of the earth right now. I actually think this is probably gearing up as you would expect this backup to gear up, and then it's going to rip back to the upside and then reverse after the fact. And then that sign of weakness is going to follow through essentially with a breakdown. What's the timeline here? This is kind of fascinating to me because, again, I'm not really looking at everything being lockstep necessarily. But I do think that the timeline here is quite similar to AMC in that I do think this could break out pretty early. And we'll see what happens. We'll see what happens after this rise. If it holds up high, maybe it holds up high longer. I've got this off. It doesn't ever come down that low. It's possible. This could like kind of stay high into earnings season, right? To the end of May. Well, couldn't it just break out there? Why couldn't it do like the same thing it just did here, but on a bigger scale? I mean, it could. That's what I'm saying. Like, I'm not really married to the idea that it can't be any different than what I've drawn. I'm just suggesting that because of the way that's setting up, it's setting up like with weaknesses. Could it do the same thing it just did 1-2 times, but again, bigger? Yeah. I mean, this is essentially the same thing. This giant M, 1, 2, 3, 4, and then we do it again, 1, 2, 3, 4. We could do a 1, 2, 3, and then 4, and the 4 could drive the price pretty low, right? Maybe even back to like, I don't know. I'm not really sure where that would go, to be honest. Maybe slightly below here, like 500 or something. How long is that going to do that? I don't know. But we could have stuff like this happen, sure, going into June. This looks like a whole bunch of sideways in the end around this range. But I think that makes the most sense. And if you're going to build out a bottom, then this initial buy-in doesn't necessarily mean it's the end. Usually what happens is you bring it back up and you spend time at the top redistributing, and then you drive the price back down again to the floor, which makes perfect sense if you're looking at a June run up for the market on the whole. So by June, this could easily be down, based on these trajectories, could easily be down here at like 450. And then July, right? July 11th or whenever that is, I think that's when I marked it off. That's when the tariff thing is up. It makes perfect sense to me that this could build out into that low zone. Right now, the way this is building out, the last known trajectories, which were this recent double top here, okay, the ones we just made, when you look at where those are, come the 11th, those trajectories are pointing towards just beneath the floor here. They're pointing towards this 467, 468 zone. And I went back and checked it out just to see what that was. And it is important. I know people have said 450. I said 450. But it actually is this little platform here that happened in January of 2024. So this could be the level at which we kind of build out a final spring. And I have it just kind of hitting and going up, but we don't know, the market may use that as an opportunity to drive the price down on uncertainty, like right after hit 450, and then basically start forming a larger reversal pattern here, right? I don't know for sure, but it would make sense. It would also make sense for AMC because AMC has, when the market has kind of rallied to break out, AMC went the opposite way. This would be very similar in that if you're leaving here in June and AMC starts tanking again, everybody's going to be kind of upset, right? But it actually works really well. It's very consistent with what our expectations might be. So it would not surprise me at all if AMC is kind of chopping into June here. It looks pretty like okay. And everybody's like, it's going to go to the moon. It's going to do the same thing. And then when the market breaks out, come June 11th, I don't know for a fact this is the way it's going to look, but AMC basically goes down for its final drops, that kind of thing. Right? I would be not surprised at all to see something like that and have the market already breaking out come July, like coming back above 560, 570 kind of area by July, and AMC is actually at its lows. That would be very consistent with what we've seen in the past. Same would go for, of course, small caps. So I don't know exactly what happens from top to bottom here. All right. I think there's a lot of things that could happen. I think the wave makes the most sense to me. Just the down, up, down. And really all these are kind of the same thing anyways. They're all kind of like down, up, down. They're just in different heights. 1, 2, 3. I think they're all possibilities. I don't think the doors are closed for any of them yet. It's a Schrodinger's cat kind of thing. It's like that one company that did 2 earnings outlooks based on tariffs. We've never seen that before. I haven't ever seen that before for their EPS. And it's like, well, both could happen, I guess. But yeah, this to me makes sense as a potential short-term bottom. So I think what's next is to come back up and really redefine or define this trend. You're either going to, what I mean by redefine is it could push over the top or it could really hold it. And I don't see this as done. To me, this looks like it's backing up and then it's going to try to go for it and we'll see what happens. And all of the triangulations and all that jazz, again, suggest it could be this week. But I wouldn't be surprised at all if we don't see the sort of the finishing of that going into next week. Okay. So that's kind of my outlook for the week. I think this is going to be sort of an off week for me personally. I'm really working on trying to reposition myself because I personally believe that this stuff's going to happen. And so anyways, that kind of concludes this big overview that I wanted to do. And then we can kind of talk about some more stuff. But I just wanted to really get that out of the way. I did not talk about GME. I've done that at length in other places. I'm not doing that in this video today. So if you're looking for that, I'm not going to do it right now. But anyways, that's what I got for you. Hope you liked it. If you don't like it, oh well. I will answer questions now if you guys want to ask questions. I don't want you to say, I say that, when I say that AMC is a buy, I'm saying that it's short term. Like, I genuinely do not think this is bad, but I genuinely think it's going to do the exact same thing it did last year, but just smaller. I really do. And I think that the targets are pretty obvious. Like, there's not really a whole lot of variation here. If it went way higher, I'd be kind of surprised. If it went way lower, I'd be kind of surprised. But this is a pretty big range. We're talking about 380. I mean, it's like 30. Well, it's not that big of a range. It's like 50 cents. But it's this pocket right here. This is where it needs to go. So I don't think that this is... well, I mean, the compact version is exactly what I'm saying. Like, if you don't want to hear all the TA, you can just listen to like the last 2 seconds. And I'm just saying this is the zone I think it's going to go to, and then it's going to drop. There's no explanation there, right? But yeah, I'll try to put together, I mean, I already have a video of it. I just recorded that bit that we just did. That was an hour, so it was a lot. So I may need to chop it up, but I will make it shorter if I can. Here's the thing, it's like I'm not a really big fan of dumbing it down. And I know that makes people upset, but to me it's about like the ethics of it. If I have a reason for saying something, like I want to make sure I say the reason. And I don't want people to think it's like one-sided kind of unilateral thinking, because it's not. This is like a really dynamic setup. There's things on the big picture that don't give you the same answers as things on the small picture in terms of like price targets and whatnot. And you really got to pay attention to all the different factors. It would be easy for me to come in here and just say, oh, it's going to take off May 2nd. Good luck. But it's not the truth. Like, the truth is that this is kind of complex, and it's still in a distribution model, in my opinion. It hasn't made this big upthrust. I'm convinced it's going to do it because of on-balance volume on the big scale. But that means on the small picture, you're really not looking at, hey, we're going to just take off. I think a lot of people are going to be looking for that. They're going to look at this as like a takeoff moment, that it's going to buy back up, and then it's going to go in May. It's one of those things, man, like, or I almost guarantee you, especially if this hikes above 4, it's going to look like it's going to take off, regardless of whether it goes or doesn't go. And that makes people so mad, but I'm like, I am not in charge of this stock. Like, I do not control the way the stock moves. I get that people get so upset when it looks bullish and then it gets killed for some reason. But I'm telling you, like, that's the nature of this operator. Everything that they've done that checks out, it's not like you couldn't anticipate it by saying, I think it's a trap, unless you just have a bigger picture viewpoint. Like back here, it made a change of character, and then it followed through on it. It didn't go the highest possible target. It went to the lowest target that I had, which was like 556 or something. I mean, it was really close. That was like the lowest thing I could possibly think of a stopping point. That's where it went. But it did fall through on the double bottom and then the change of character there, and it just left. It jumped the creek. But I mean, like, there's nothing you can do. Once it got to that point, it slid back through. All right, that's it. You know, so be it. So people they want the silver bullet. They want to know that this is going to work perfectly. And then if they hold through this position, it's going to just keep rocketing. But I can't say that. I have to say very honestly that I don't necessarily think it will, because I don't think that on balance volume was brought down enough. And I have to just kind of say that's what I think, period. So, like the short version of it is, yeah, basically May 5th, I think we're going to have a pretty decent move. I mean, on the big picture, it's about a 60, maybe to 50 to 60 to 70% move. It's still a big move. But it's got to be smaller than the previous, because if this is just an up thrust, then the idea is just to get back up and check that $4 region. And then really everything else is potentially just a trap. And I'm telling you, if they hike that on balance volume up high enough and we start seeing that distribution, I'm going to be really watching closely on that 4 hour, because it's going to be probably more obvious on the 4 hour that it's actually breaking down on the 4 hour OBV. Even if you don't see it in the price action, you'll probably see it hook in the on balance volume on 4 hour. And it'll already be doing the cat ear kind of thing, and it'd be breaking down. So yeah, I genuinely don't know how much of a trap this will be, but I think it will be regardless. Whether it's bearish or bullish, it's going to look kind of bullish. It's got to. It has to, because the point of it is to bring in the volume. So it has to look like something good. What makes this highly effective, what really makes this efficient, I think, is that this is the perfect time to do something like that if the market rallies. It's no different than what happened after COVID. The market had a big steep sell-off. Everything goes kind of together. AMC gets this big exaggerated bounce and it comes back down again. But while that's happening, it's coming back down again, right? The market starts having a rebound moment that's really breaking out. It's like lifting constantly. There's an SOS, right? The small caps and SPY have like this SOS moment, sign of strength moment. They don't go back down for a second spring, and they just start going. And that's where the huge hike in on balance volume really plays in, because as soon as that breakout happens, you can go look. You don't have to take my word for it. If you're just like wondering about when all that stuff occurred, that big motion that occurred, it's like perfect for a spring is what I'm trying to say, because the rest of the market's like rallying, and GameStop was rallying too. I don't know if people realize that. They still think that they were 1-to-1. They were not 1-to-1 back here. Like GameStop was already moving up in like squeeze territory. It was already going. It was up here like squeezing above its creek. AMC dropped down really low. This setup is not 1-to-1, but it's the same idea in terms of like where you want to get that buy-in and that apparent breakout. And it's the same cat ear structure. It really is. The way I would be wrong is if I'm misreading that on balance volume. That's it. Like if you want to kind of like find a way to put a big crack in all this, is you go back and look at the on balance volume and find a way to say you're wrong. But I still think that this motion right here is more closely associated at this point, not this one. This motion right here is more closely associated in some ways with what we experienced back in December than this, which a lot of people will disagree about, but I think that that's just the way that I see it. I think we're in a longer winded setup. It's going to end by August, in my opinion, because I think it's still a cycle that's like 2 years, but it's going to be ultimately not over until 2026, in my opinion, early part of that year. This is where I think you could maybe try to throw some wrenches into it if you want. But right here, look at what happens, okay, coming down. Look at where the on balance volume starts going haywire, okay? And we take that under consideration. really it's this, after this big push up here, it looks like it's going to go. It doesn't go, right? This looks like a completed cat ear because it is. There's a 1, 2, 3, 4. There's a 1, 2, and then there's a low wave, and then a 3, 4 high wave. And then it drops down, and then it has this reaction that's like a high volume reaction. Comes down kind of low, but look at the on balance kind of staying where it is, maintaining like a higher level here. And I'm saying right now that's not quite what's happening right now. So I was trying to make the point that like it's not exactly 1-to-1, but it is bouncing out and trying. And it actually does it again right here. So there's a second time it happens. So you got another iterative cat ear here. 1, 2, and then 3, 4 are over here. So I'm going to purposely make them like smaller. And then guess what? It actually happens again here. And then it happens again here. They just look like really small, so you can't see them. But those are the cross-ups that are happening. And all the while, the market is taking off. So each of these, as they lay up, check it out. Like they're laying up on top of the next, on top of the next, to kind of give you that push all the way out. This is essentially identical to what we're seeing right now. This kind of setup right here. It looks like garbage, right? It looks like it could keep going. The volume's really low. It's crappy. There was a little bit of, some big volume hikes here and there. It's just eking out. And then all of a sudden right here in November, and you guys are like, well, it was after earnings. Yeah, I know. But don't confuse like the news with the technicals in this case. They're both working together, right? There's something there, period. What was there for us was the 90-day thing. That was the big buy-in, right? That changed the way the chart looked, all right, because of that massive push-up. This is very similar to what we see on the big picture. And then you look at this and you say, well, that doesn't look like what happened. And yes, it is, guys. It's the same exact thing. Like, I know that what happened in that May timeline really throws people off because it's so steep and dramatic. I get that. And it looks like, again, this buying climax comes after the fact, after the first push. I get that. But if you had changed this to just do this, it would look essentially exactly like what we have going on right now on the big picture. So this setup right here with the build out is no different, and it's the same thing on this scale. If you had the same exact thing right here and you had that pump up, right, and then come back down, it would look identical to this smaller iteration here. They're 1-to-1 is what I'm trying to say. This is a shrinking version of that. So I'm suggesting to you that we're doing the same exact thing right now. This build out is essentially a mini-me version of what happened here, and it's going to be smaller as a result. It's doing the same motif, and it actually does it again. I don't want to get into this too much because this is like really in the weeds, but it actually did it again down here, really small, but this time it crosses up and over instead of down. So there's a big buy-in, and then when it comes back down, it never goes backwards again. So it does the first ear, maybe even the second ear there. I'd have to go in nitty gritty. And then it crosses up instead of crossing down, which is what was happening. So what I'm trying to say is that, like, I think that what's more likely is that we did get a big push up in on balance volume in December, but it's more closely associated with this. We never really left the range up there. That's a big part of it. We never left the range, which is exactly what we see here. Is like this comes all the way back up to like the top, which is kind of crazy. You're like, why would it need to go that high? I don't know, but it did. It is a hook, isn't it? Yeah, it's a hook. It's there. You can see it's breaking down. It does eventually point to, by the way, the next top, but only after iterating again and again. So when you look at what we see in the current setup, it's very, very, very similar. By the way, if you're wondering where that top is and that area is, It is over here. There are different ways of analyzing this, so I don't want to make it seem like it's a one size fits all. But it is quite high. So you think it's only going to come to $8? I didn't say that. There's other reasons why it might come higher. But if it only came to $8, I wouldn't be surprised either, because that is where a hook is. That's too low. Yeah, it is. There's a window though. That's the cool thing. Is there's a bottom here and there's a bottom here. That creates a crossed set of trajectories. This window is, by the way, exactly where it needs to be. If you look right up here, that little pocket is exactly where you need to be to get the 2-year cycle, and it's right where the creek is, the big one from like way back. From August to August kind of creeks, year over year over year. That's where it is. It's all right there. So that's the pocket zone from like, we'll say 850 up to 13, maybe even higher, because it could extend higher. That's fine. Well, what about, back testing and all that? I think a lot of that depends on what happens now, because when you look at what happened with AMC in the 2020 breakout, the sell-off that happened was massive. It really, depending on how you measure it, it could be measured up to 786 retracement, which is quite unusual because it looks like an SOS with a huge backup. But that's important because it's important to note that they're not connected in the way that a lot of people think they are. There's like an SOS with a big backup and then a reaccumulation. It's like a separate thing. So there is a chance here that, we get this massive push. You can see that white line coming down. That's my big white line that I think is really important. I think a lot of this might depend on what happens right here. I think this genuinely could define where that backup goes to in the future. Because if this ends up building out high around 4, then when we back up, I'm like, yeah, we come all the way back to 4. I mean, that seems right to me because I'm like, yep, that makes sense because that's where that level would be. As opposed to, oh, well, it stops at 335. Well, that's a deep backup. Kind of puts a wrench into things, doesn't it? If you think it could only come up to 8 and then it has to back all the way up to 335 and then reaccumulate around 6. That's really low, isn't it? Yeah, it is. I can't predict everything under the sun. But absolutely, this next push up, I think, is a defining factor for what happens during that breakout later. And I don't think the answers are perfectly clear yet. I think they're going to be there. So I'm going to be watching it pretty carefully. But I would suggest to you that, anyways, the rest of this is essentially the same. Like, this is the walkout here. It's still, like, struggling, I think, to hold any kind of a serious, and this is a mixed bag right here, the way I drew this. It seems like it's struggling to hold any real serious breakout. It keeps raising this up and then not going back and retesting it, so yeah. To me, that doesn't look like the best, but I guess you could use that one since it's wrapping around it right now. There's more than one way to look at this. I would probably use this as a really key metric, but we haven't actually got there yet, so this would just say, oh, you haven't broken out yet. Well, no, duh. In this case, it's not really a leading indicator, is it? It's definitely not. So, to me, I'm like, yeah, I get it. If you use this anchor point here where the breakdown happened, and you use this next pivot, we haven't even gotten there yet. We haven't broken out. Likewise, we could try to use these points of interest, like the high here and the high here, but that's really steep. It's like way down here. That would suggest that, yeah, maybe altogether skips it. But I actually think that that is more of an indication of where we go later, is why I'm kind of advocating for this idea that we may drop down significantly. Like, this works perfectly on a cross. Does not work without an upthrust, but you could have an upthrust here and then come right back down on top of it, and that's right where you need to be. So I find it to be really, really consistent. I'm just waiting for that push. So I don't see a huge amount of difference, right? in what happened in the bigger picture market back then versus what's happening now, aside from this is self-inflicted, like we shot yourself in the foot, as opposed to COVID, which is a little more out of left field. So the recovery effort might be not quite as bullish as we may have hoped, you know. There's another thing to consider is like if the market conditions changed, it's possible that this doesn't go as high and it really takes more time down bottom because the market is sluggish. I think the next move up is a market-wide squeeze that probably falls flat on its face and chops more sideways than expected. I'm very, very skeptical that this has any kind of a real V-shaped recovery, unless there's big news on like China trade deal. And even then, the 10% tariffs are still there, so that's not changing. Those seem like pretty surefire, like they're going to stay. Growth is expected to decline as a result. I don't know why people keep saying the Fed is to blame. I don't get that. They don't control growth per se. They just react to it. Every economist under the sun that I've seen, it doesn't seem to matter whether they're conservative or they're more liberal in their fiscal approach, says the same thing. So this is historically how tariffs work. So I don't know where this argument is that growth will somehow be all of a sudden better. It's going to slow. So even if there's a positive source of news, I don't think it's going to be like a long reaction. I don't. So am I bullish on Tesla earnings? Yeah. Momentarily. What you're not going to see is, and I did look at BlackBerry today. What you're not going to see is me talking about Tesla as much of a good trade until maybe tomorrow. And I think we're going to see it like we are right now, sliding. But this is also pretty interesting because Tesla has extremely similar vibes to like AMC's 2020 bottom, which I think is pretty straightforward. There's a lot of divergence here on this bottom that could lead to a massive squeeze moment. But what's interesting again is like looking at this big picture, it certainly seems like all that's happened thus far is that we've created a trend, which is what's occurred here. There's been a number of targets that have tried to get back to, and every time they've been there, there's been these big squeeze moments. There's been a number of targets that have tried to get back to 300 to 320 for Tesla. Like bulls clearly want to go back up again to that March 4th area, which is the same that you see on SPY. So it makes sense, right? But they're not being successful in it. Instead, we keep getting redistribution and then driving the price down. There's a lot of consistency here in Tesla. There's a widening that's been happening, and now we've kind of lost the top of the widening again. We did 1, 2, 3. The bears decided to short it back down because this stock is, frankly, it's always been like overvalued. That should not even be controversial, right? And then you have all kinds of drama surrounding Tesla. So if their earnings is good, I'm bullish. If they can manage to give some really good guidance and talk about the future a lot, their numbers are probably not going to be very good. You know, they really need to talk about their new initiatives, and he needs to get his head out of the sand and run his company. Instead of trying to like be a politician, you know, and he knows that, I think, but at this point it's almost too late. I mean, he's got to do a lot. So I had looked at Tesla and I'd seen bullish opportunity back here. I had seen some bullish opportunity even in this area on these swings, but aside from playing it with swings, I don't think it's been a very easy play. There's been some really good highs and really low lows. So you got to be really careful with stuff like this, you know, when it's going crazy volatile. I had targeted early on this level around 216. You can see those targets were actually earlier than expected. They were back here on the 16th. It's got a pretty gnarly creek right now that it hasn't jumped over, My expectation was that we would see some kind of a final spring motion. I think of this as kind of a phase B type bottom. If it's going to go to the upside, could it just ignore that and go up? Yeah, but I'm going to say right now, I think if it goes up and it ignores this bottom, if it hits, for example, like 223, that could be actually like an underlying bearish, kind of a bearish thing to go up first. I think it would be stronger to have like a final sell down and really cement this floor to get like one more push. So maybe it's today, maybe it's tomorrow, maybe it's at earnings. I don't know. It would be nice. I think it would be a little bit more obvious. We'll see, but there could be a sell down right here. Long term, that makes sense. There's a lot of trends that are marking up here. We just haven't hit them yet. So it makes sense to try to get there. I'm not really bullish at Tesla unless it gets above 250, which is that level. So this may seem like it does not go one-to-one because you're like, well, yeah, but 280 is up here and that's where that drop-off is, and that's on April 3rd, and you were saying SPY, might come back up to that April 3rd. Sure, if it's one-to-one, then guess what? They're going to ride up to that April 3rd place together. And that's really about the same spot anyways, right? So Tesla would be far exceeding the market in that regard if it just rides up going into May. But it's really hard, I guess, right now for me to look at it and say, yeah, that's exactly what's going to happen. I can see the divergence is still trying to hold. Technically, like this bottom to this bottom, it is bullish divergent, but it just had a big reaction, and now it needs to make either a spring or an LPS. It looks like it's primed to do that at earnings. If it can make a spring or an LPS right here, it's going to be primed to like fly. Just like before, over here. But maybe even bigger. I haven't really done too much to, I don't know. For Tesla, it's been kind of irritating. I really just got out of it. Because some of the setup was, it was like just news beget news kind of thing. It was just nonstop bad news. And I don't feel like at the end of the day there was a lot of clarity. So I just got out of the position. Right now, I'd probably be looking at this guy. Like these would be the most important levels. So let me show you. Here to here, because this is the breakdown. And this was me guessing at where it might go down. Actually, pretty close. So yeah, again, I think it has to get above 250 to really be more bullish. And at that point, you're already like pretty much there. So it's like, well, what's the point, Well, I don't know. That widening would have to break here. So do I think that by next week it could be back up to 250 again? Yeah, it's very possible. And then maybe even going beyond. I mean, I have it on the chart. It just depends. I think when I did the widening, it looked like it could go up to 300. So I might even expect it to go that high. And then if you look at the really, really big picture on Tesla, there's a pretty massive widening. And again, it kind of reminds me of the disconnect that we have on AMC, where there was like a huge trend that just wasn't checked. There's two trend lines. One's this big yellow line, one's this big white line. The yellow line certainly seems to be like where we're whipping around right now. So you can see if we whip around on top of it, so let's say we go to 300 and then back up to 275, which would provide support here. It would be like a creek support. It certainly does seem to suggest that, yeah, that could be in kind of a squeeze mode. And then you'd be breaking out of this wider creek here. So the intersection looks really, really simple, like triangulating. That intersection looks really straightforward. But there's no guarantees that's going to happen. You have to wait and see. So at this point, I can't say it will. But it could happen, If I had enough cash on hand, I'd probably be looking at least throwing a few towards the 370 area, going into the middle of the year. And that's about as far as I'd want to go in terms of guessing, because I think the rest of this would have to play out. If it suddenly went bearish here, like I wouldn't hold those positions, But yeah, I do think there's a good chance it tries to get back to 300. That's been a frequent test. 320 is another one. There is a gap up here, and it's a big deal. But I think that the second gap is at like 400, and that would be again maybe later. The structure here is not particularly solid. There's a lot of room, meaning like there's a lot of space that things could go south before they go up. So there's not really any reason to suspect, unless you think XYZ happens at a particular time. And the only thing I could say right now is I think that when you're looking out at July 11th as that kind of D-Day, that could be a big one for you and for me to look at and say, yeah, I think this is where we're going to have a lot of, this is where we're going to have a lot of question marks. Like right now, clearly, like the top 2 points here, guys, is the same thing that I said on SPY. If you look at SPY, the intersection, if you look back at what happened, there's a lot of different points of interest, but if you look at back what happened here from March 26th through the 2nd, it really points towards this low region going into July 11th, back down to where we are now. I mean, essentially back down to 480. It doesn't really matter how you slice it. So when I look at that, I'm like, okay, sure. So at some point it could break out, have a attempted run up, but then come back down. And that seems very possible. It's kind of like a creek cross, which an early creek cross that then has to jump again later. That would make sense. Widen out the range and then walk across that creek again later. Tesla's different, guys. And Tesla looks pretty darn bearish by comparison, because if you look at where that is come July 11th, this is way down here at like 180. It's not the same level. That is consistent though, because during this sell-off, we did have, weakness there that's pretty extreme. I mean, there's obviously people that would say, well, no, I think it held up pretty well, or this or that. I'm not going to get into like super strong details about that, but what I'm saying is like right now, the setup itself seems to favor, if I were to give SPY a target, I'd say 450 to 490. If I were to give by July, which means an upside move right now would not ultimately go forever. And for Tesla, it's kind of like, yeah, I mean, it really could go all the way up, but I think it's very possible that this kind of stops short of anything more than just sort of a fake out rally. And we could easily see it come right back down and kind of build out like really low going into that time period. So Tesla is a little different. It changed if you look at the way Tesla moves year to year, it's a little different. It's a little off from a lot of the market. It doesn't move quite in the same time. So you just have to kind of keep in mind, it tends to have higher push like later in the year. It's like a month or two after everything else. I don't know. It's just different. So anywho, I don't really put a lot into what I'm saying right now with Tesla. I'm just kind of like throwing it out there. Like I do think this is important, but I'm not going to, I mean, frankly, I don't even have like the capital to trade all this stuff. So at this point, I'm pretty much, my portfolio got pretty wrecked over the last few months, as I'm sure a lot of people did. If you were over leveraged in like growth stocks, I had bonds and some other things, some really good ETFs that didn't do bad at all. It was just the overabundance of trading in these kind of larger, big ticket items. There's been a huge amount of volatility. Great if you can catch those swings, not so great if you're on the wrong end of those swings. You tend to get burned pretty fast. So, and then frankly, one of the best callouts I've ever had yielded nothing. And I'm not really that mad about it. I'm just kind of like, all right, it is what it is. I don't know what to say. I can't make it do something it didn't do, but that was just the way the market was. Volatility too high. So am I bullish for Tesla earnings? Yes and no. It would not surprise me to see it drop again, but after that, I think you're likely going to see it rally back up to near 250. It could be this week, but I wouldn't be surprised if the powers that be, the option sellers, keep it below 240 till next week. So I wouldn't be looking for anything more than that. Maybe some more evidence that this could drop down again would be this guy. That does seem in line with what we'd expect. And we've already seen it on SPY and some others. So hang on just a second. There's a Ninjago show. They got new episodes. Dragon Rising.
Yeah, but
I'm just telling you.
what the? Why does it look like that?
That's the Pope. He passed away today. There's nothing earlier.
Oh,
What are
him.
you trying to watch?
Oh, can Netflix. For some reason, I don't know why that like mine isn't working anymore. It's just broken.
What's not working?
My app thing, picture, whatever.
Oh, yeah. I don't know.
Broken.
It is. It doesn't want to download anything. So, I don't know why.
Why is Sean just use teeth like on the side of his face?
It's just the character, the way it's designed. Yeah. So, anyways, I think the S&P 500 and Tesla and all that has a chance to go up this week. I was trying to stress that I don't think that. Just to summarize that point, I would not be surprised if it makes the higher push but doesn't actually go. So, just to be clear, like let's say this dumped on earnings. I would not be surprised at all if this pushes up and then drops, tomorrow or whatever, and then it ends up doing a higher push, like there's a big volatile reaction down up or just up down, whatever. But that makes a higher high here on a local bottom. But like you can see right where we are right now, this is a very likely place to come back to by the end of the week. It's already sitting on like where the liquidity shelf is, so it would not surprise me if this sold off again and refused to go forward until Monday. So I would be really cautious about getting anything that you're expecting to just kind of turn over unless you're going to use it like really fast. Yeah. So I think this afternoon, I think we're really overdoing it right now. I'm pretty sure that this afternoon we're going to see a green rally, but it probably won't last more than a day, meaning like it'll be a few hours of like, okay, we're going to get some back, claw some back. That'll be the story today. You'll have people saying, oh, SPY dropped really far and then it kind of clawed its way back. Well, that would make sense. We need to kind of generate like another, in my opinion, probably generate like another top here. It may come a little bit above 513 when it responds because, and I think you'll see this market wide. That's my opinion, but I think market wide you'll see this kind of happen. We'll pop back up. We might get a rally up to near 514, 515, like at highest, and then my thought is that we'll probably chill out, maybe even drop back down, and possibly even come to another low going into tomorrow. And I think that we'll have to kind of wait and see on the rest, but that would make sense to me. Just get a little bit of that loss back. This is a big drop here. potentially on a wave, this could come all the way back up to 519, but I wouldn't put it. I mean, that is a 50% retrace, so I mean, it's possible. I just wouldn't be surprised if it tried to make another low here. Anyways, and then I think on probably on like that Tuesday, Wednesday area, you'll see some kind of like a reaction. I think Tesla's doing their thing in after hours Tuesday. So maybe Wednesday morning, you'd have some kind of reaction back to the upside. It's hard when the chart's like really small time frame. So I space it out. Yeah. So this is like turning into a widening. So what we would do is look at this as a widening. Yeah. And then that gives you a chance to break out on Wednesday morning. Whatever Tesla's doing, we'll see. And then I think Google is on like Thursday or Friday. It's pretty late because I remember thinking that was kind of odd. It's in a weird spot, so that might be why we come back down. So what we may see is that we kind of chop down low beneath. So we do something like this, and then we'll create a higher low on Tuesday afternoon. So Monday, like I said, I'm not positive we can't do it today. It might. But I think it's going to be pretty flat Tuesday regardless. At some point, we'll need to make a higher push here. And it'd probably be like near a 50% retracement. And then we'll do a big deep retracement, like a 618, or excuse me, a 786 or 854 on whatever bottom we find. And then on, we may even just gap up. We'll see. I don't know what's going to happen with Tesla, but I think we'll see it rise pretty decently. If we're fortunate, the S&P 500 gets an SOS pretty early, and then it can kind of rise back up towards, I don't know if it'd be that fast, but kind of head back up towards 530. And then come Friday, again, I wouldn't have a lot of grand expectations for this. So it looks like we may have like a Wednesday move, and then that's it. That's going to be like a horrible week because you really look at the week, it's going to sort of start and end in the same spot if that happens. But I genuinely think that's the most likely thing to happen this week. And then next week, you're like, well, yeah, but you got to go way up. I know, I'm being really optimistic there. But I do think, I think that when you look at this big picture, it's not hard to imagine this waiting for Google. So I can double check. Says Thursday at 1 p.m. 1:30. Oh, so that's 4:30. So after market close on Thursday. Yeah, it'll be a battle this week. Your bears are going to be way, way, way. I think they're going to try to knock it down no matter what. So they'll probably take advantage of that after-hours session to just crush it if they want to crush it. So it's possible. It's not impossible we get like a rally week that continues Monday. That does happen. So I would suggest if that's the case, then Friday we actually see it like gap up or something. And then maybe it chills out at the top. And then Monday, that's kind of a weird way to put it, but something like that. And then Monday you can have it sort of continue the trend and just be up there. And that would make sense to me as well. The timing of it's a little odd because this to me looks like it would be to me, I've already said this before, and I've been wrong at times, so it's not easy to say it. But there are some pretty decent triangulations going into Wednesday, but I would not be surprised if it was Monday, just the way that these markets tend to go. So if we're fortunate, we see that breakout Friday, and it's a really big green candle kind of week. Starts garbage, then ends really well. That would be like an engulfing candle too. So it would be really strong, and then you'd have continuation the next week, Monday. And again, I've got it going up to 565, but I originally had it potentially coming up a little higher to like 575, So we could easily see that as like another top for like Tuesday. But after that, I'm not really feeling very bullish. Just saying. Well, that's a breakout. Yeah, it is, but it doesn't really matter what happens after this because you'd have to come back to the top. Like you'd have to come back to 545 no matter what. Whether it's on top or below might make a big difference, but that's where you'd be. So I'm doubtful that we see anything any higher than that at most. And frankly, like I mentioned earlier, this could stop as low as 550. So if you see this, we're all going to be here hopefully at some point or another. If we see this kind of really struggling down low, like we may not expect it to go all the way up. We may only expect it to go to 555, The trade itself would be a pretty quick 1 week kind of trade. I don't think you're going to have, yeah. And it does make sense. If this is a bottom, if you look bottom to bottom again, or top to bottom to top, if this hits a bottom today, then you're looking at top again on the 30th. So our timing is actually pretty close to right. Yeah, but this went way up first. I'm not even doodling that. I don't know what would be the point in that. It would be like a squeeze, but I wouldn't be able to predict it. I mean, you look at this bottom to bottom. If you look at where it broke out, so this is the M1, M2, and it came down. This is the breakout, so I'm going to use that. That's where it jumped the creek finally and took off right there. So if you use that as like a midpoint, it does give you the second top, not the first top. This is something to consider. I mean, if we see that as likely, then, the breakout would be over here because obviously this would have to do something similar. It looks pretty similar, doesn't it? Push up and then the chop. I mean, that's pretty similar to what we have here. I just don't have it going up as high. It'd be like that. That's consistent. It's like that. Anyways, so that breakout would be on the 23rd, which is Wednesday, is what we were saying. Like, so maybe middle of the week run. So Wednesday could be a squeeze day, I guess. And then just kind of crap out. If it takes that long to break out, sure. Then you have an opportunity to suggest that really we don't go anywhere until like May 5th. That could be like a second top. That's a whole nother ball game, isn't it? That doesn't even fit in any of these. So that would look like an actual squeeze. How far does it go? I genuinely don't know. When I charted the first one, it had trajectories that were really high, but it never actually went there. And it seemed really obvious, like, oh, here's the direction it's going to go. If I'm just doing like kind of averages, I'd probably say that This seems about right. It's kind of in between the two. So this would be like a push to 580s or 590s if it went later. If it went on Wednesday, which it's very unlikely, guys. I mean, doesn't the market doesn't usually have big 10% days. That's pretty unusual. But if it did do that, then you would expect it to go kind of like I have here, but maybe even higher. Like this. 575. And this kind of works, except that it would come back up. So you would have to back up pretty far. That might be where these other triangulations come into play. If it did that, you'd come back down here. And it looked kind of in the middle, like usually what these kind of feel like they're not that bad, and then at the very end they kind of stop. They hook underneath whatever they're trying to break over again. And then it would come down low and then build back out again. So it's sort of like a larger version of this cat ear structure. But notice that this one came lower, this one was higher. So this one may actually stay low. There's no guarantees. That has to come back up again. And if this does hit, that's really close to where I was estimating. I don't remember why I did that exactly, but I was estimating it being right here. So I put that line out there. I remember thinking if it expanded. So maybe we do see it come back up. And it's, again, pretty long-winded. That would be us approaching the top again, but doing it. I have to probably look and see what else earnings are coming up. If there's anything around the 29th or something. Seeing it kind of beat out and then chill again. But that's a very like what ify kind of scenario. Yeah, I could see it. I mean, technically it already made the sign of weakness. So then if it did it again, it would punch through this one low. That's consistent. So it'd come through here and then go back up. It's not that different from what we saw before. Anyways, it almost makes no difference. It kind of would depend a lot on Wednesday, I guess. So I don't think Tesla is that important. But if it kicks off earnings season the right way, I could see that really adding into Google. It's just hard for me to see why that by itself would happen. But I guess we'll find out. It's weird. None of these look like... None of these really look like they... I guess that could be the case. It could be a larger jump. Like a big pop that looks like it's going to go Wednesday, but then it drops back down Thursday, and then Friday. That would be really weird. It like squeezes. Friday into Monday. Yeah, it's possible. Anyways, if you want to know what I'm doing, I've already positioned myself somewhat around April 30th. So I've already done that. I was looking at that yesterday and decided to try to position myself to April 30th. For SPY anyways. So this is why I'm not so sure about Tesla. I feel like Tesla could approach this by the 30th. I don't know. And still not go. And then if the market goes down, so really, it really is important that Tesla gets above 254. Like, it might even be the most important level right now. Because I think if it gets above 254, it's very likely going to go pretty far. Like, it could go all the way back up to near 300. But if it can't get above that, then I think it's, unfortunately, it's kind of in a position where it would be like where the market is going to have some issues and could turn back down. And Tesla could just go with it really easily right there. So maybe earnings season will bring about like a longer, slower build up. You know, you could see this kind of start having some weakness, but really sort of hold up, like I was suggesting, hold up a little bit better, kind of build its way back out without breaking down too fast. May even see it come back up on here and retest the same level more than once, like that. So anyways, somebody asked me about GME. I don't know what else to tell you except that I think it's pretty much the same. Like, I've talked about GME so much in the last few weeks. Nothing's really changed. I think that there's a high possibility here. I have it already on the chart, going to 30.32 by Monday. That's been on here for a while. So that has been, I mean, it's been on here for a long time because I did it weeks and weeks and weeks ago, like maybe over 2 months ago even. I think I first did it in February. So my estimation was that we'd come up here around earnings. We may stay high, but that we'd really interact with this area more. The downward wave is kind of taking precedence now, but we're still missing that. In my opinion, we're missing that up thrust to 32. So there's a lot of similarities. There's some differences, you know, obviously, based on where we were, you know, at those time periods. It almost looks inverted. But I actually think it's quite simple. I think GME is likely going to go up to 32, and then we'll see what happens when the market does likely chop or turn down. I don't necessarily think it makes any sense to continue from there. I think we're likely to come back to 17 before earnings. So that's where I think we're going to be. So I think we'll get a pump up and then we'll come back down. Could this already be done? I don't think it is. I think that you're going to look at this and it's going to be right around the time that this is getting overbought on the 4 hour. I think you're going to probably see something like that and then it'll come back down. This is really irregular right now. It's not normal. But what I mentioned was that if this is cat ear 1 and this was the between the ears, your cat ear 2 doesn't have to exceed this point. It could be done. It's like over. You know, it's entirely possible that it's over. But based on the wave suggests that no, it's not over, and that Friday into Monday you'd be going towards 32. It just really depends on the way this market reacts to things, I think, and whether or not there is actual good news. Yeah, then I think GME uses that as a flush opportunity. Well, and how could AMC be going down, you know? Oh, I don't know, guys. Shouldn't they be 1-to-1? No, I don't think so. Because this is April, and May. They both get there at the same time, but AMC is kind of low going into May 13th, and then just shoots up for like 2 days, and then it comes right back down. 2 days later, it's back over here, where the target was. It is sort of similar in that AMC was behind again. So I don't know. It does bring in a lot of questions about timing. But like on the 13th, this had already come up to the top. They're both rocking, at the same time. It's just the build up here was more straight up. So I don't know. I don't see a lot of strong comparisons outside of that. And the fact that this still looks like both of these look like they need to do cat ears. One thing that I do wonder is if GME is not destined to go low, then this build out could really be anywhere, because you could take this sideways and up into June and then dump it after earnings. You don't have to come back down. If it is destined to go low, then it almost doesn't matter, So what I mean is that if we erase this drop and then have it react back up, so let's say it comes down into May, and then AMC has this squeeze moment or whatever. Again, maybe GME participates in that as well. And it's just really volatile. So if this holds above, that would look like it's holding the ice. And then you could just like kind of prop it back up. This would change things a lot if it went that high, I think. It'd be tricky. I don't know. They don't really match. I guess that's my answer. They don't really match. They kind of do, they kind of don't. Well, I mean, they only don't match if you think that GME's gonna leave. Oh no, they do kind of match. I'm sorry. Because July is where we're talking about coming down. That's true, because in the original run up, GME did just go. It hit its low earlier. And then AMC took extra time to get down. Let's see. That is consistent. I'm sorry. I misspoke. I said it wasn't consistent, but it actually is quite consistent. Because in the original setup, yeah, it's totally consistent. This is April. It hits the bottom, bounces into May, June, July, August, September. It's coming up. You have to take into consideration what you're actually visually seeing. It's not enough just to or what's actually being compared. There's something really odd about this setup that bothers me, and it's the timing of the low. The low is way before, and then everything was really consistent when we broke it down into halves going into October. Something's off. This is up in October. It could just be that that's like the pivot point. Maybe this was there too, you know? Like it could have been pointing down here to October, but it just didn't follow through. It's possible. So I guess there's a couple ways to interpret it. I don't want to go too crazy here, but one would be that this is sort of the earnings buy up, which is really very similar. This has like a massive drop right there around earnings right after in March. Very similar. Drives the price down, and then it comes back up in April. And then May through July, it's really just sitting here going sideways. It never goes down again. But the setup does have a really simple to read cat ear structure that's diminishing. We know it is because we can see the structure shrinking here. So this actually does have a July to August breakout. Can't be that simple. That's way too simple. But it's like what I'm saying. I know it sounds weird, but it really is very similar because we missed the target. Like we hit the first one, then we went way south. But if we were doing like the same comparison, we would say that all we've done is like this. We didn't actually go up and hit that S-curve. So we were doing the measurement as if it's going to come back up. Yeah, it like never got there. So we're looking at it right now. It looks kind of like this. We never went up high. We just kind of sat down there. And I'm confused because I'm saying like, well, it didn't ever break out there. We're like beneath it. Otherwise, it's pretty darn close to the same. Because I'm suggesting that we come back up to 32 on the basis of the wave here. It's really 1-to-1. You see what I'm saying? See how like it didn't quite... It did hit it though, so... It's just really volatile. I don't know. Timing though is wrong. It's way off. Why is that so far? Oh, that shouldn't follow the red line anyways. Yeah, so if it follows the red line, it's there Wednesday the 30th. It's pretty dang close to what I have anyways. So it does seem to be like a squeeze into next week. That's consistent. This goes a little beyond it. But that's right, and it comes back up to the top. But then what happens here is it does not succumb to the weakness. So what happened in the first setup is it never comes back down again. It does have an LPS, does not have like a real, like that is kind of your spring. And see like this, it just stays up, never comes backwards. But I bet you if we had done an S-curve at that time, from the top down, we'd be saying the same thing, that this could hit and then come low like this. You see what I mean? I'm trying to think about how I would do that back here accurately. I'm trying to remember what I did here when I did it. I think I measured from... Oh, I used the creek. That's right. I used the creek and then I did a 50-50 on the creek. Well, I mean, it did come back down there. I picked the wrong thing though. It makes sense because this would be like the competing waves, and then this does end after. So it suggests you would hit high and then come back down. So in this time frame, we would have said like, oh, if this breaks down, then it comes back down low. That's what I'm saying right now in the current one. So what happened here is that it doesn't ever come back beneath the ice again. It holds really high, actually kind of holds this. I mean, it doesn't do a great job, but it does hold the, like, because I mean, that's weird, but it does hold the creek on the hole. So it's like it's a spring jump then. This is like a phase B top, bottom spring. But notably, this drops beneath the previous floor. And there's nothing else here. So there's a bit of a difference because of the way this is set up. There's a lot more in this. There's a lot going into this. But the floor itself, oh, I don't know, guys. I mean, it does come up really high and then drops through the floor. Okay, so there could be a really strong consistency here then with AMC, because what we're seeing is that if this breaks up above and it can hold that creek, which I kind of think I already have drawn out, because I think it's this big guy. It's this one. Yeah, that's the right one. That would be the one that you'd want to hold, and it's working right now. As in, it's where it's supposed to be, kind of thing. Yeah. So this, in theory, it could come back down pretty far, but what happened in, like it did technically come back through, but what happened in 2020, if you're comparing it, it took months. Like it took months to work itself out. It was not fast. It looks fast, but you got to look at the dates. That's April, that's May, all the way to August. So that's a long time. But yeah, July, I don't even see a really big breakout there in July. But I think what we'd be talking about is something like that, where basically this doesn't take quite as long, and then it would break out maybe in June and start heading up. It's 6 months earlier. So this might be a bit faster, but this would start heading up into July. And then AMC, so it's like up here doing something where it's breaking out. We'd have to look at the levels, but I think it's around $50 or something like that. So this would be like 50 and going into July, and then it would rip. It'd be essentially the same kind of workout here. If it does the same thing. But yeah, all this time is used to sort of cool off the RSI. And then it just goes crazy. It doesn't actually jump the final creek. There's two creeks here. So the first is jumped, but then the second one is not until way later in August. Maybe even third one if you count this little guy. So it jumps over, builds another resistance, jumps up, and then it breaks out. We haven't seen that happen yet, but it would be imminent if that were the same. I actually think this is kind of interesting because when we looked at this originally, I had talked about you can see it here, I had drawn out this like sideways period, like it would jump the creek and attempt to hold it and then potentially fail going into August, which is a really similar timeline. And I didn't realize it was that similar. But this seems to suggest that you could abandon this altogether. Of course, this is a much bigger wave down. It's not the tiny one. So, I mean, that's kind of crazy how similar they are. So if this thing lifts up to 32, it's over that big creek now. Said I wasn't going to look at GME today, but if that's true, and then AMC takes a nosedive, so we wanted to look at the timing between the two on the original and see what was happening. I think I already know. Because I think September over here, this is when it's building out. So it finally gets to the SOS in September through December. This is the key difference zone right here. So September through December, it's going up and over. And I already know what AMC was doing. It was going down. This is September through December right here. Still doing that iteration down. So it's quite the opposite. In fact, you can go all the way back to like September 1st. You can see that that's really the breakout here. September 1st through January 12th. That's when all this crazy stuff is happening. That's like the final breakout. And in AMC, September 1st is the top. Through January 12th is the bottom. So it's quite literally like the opposite direction. Goodness gracious. So I'm not so sure. I don't know how GME could accelerate that much, but like we're kind of suggesting that it does by thinking that it goes in July. There's nothing to say it can't do something a little bit different though. Because last time GME went, it just went in like one move. And then it has a longer build-up period, but it just goes once and doesn't have the second one. I mean, it's there, but it's not there. What would probably be best is to just continue to use like a helicopter view and really focus on the directional input that was going on at the time and like what would be perceived as like a likely timeline as a result. There is an acceleration of factors here, but it's like anything could have happened in the between here, and it could have still gotten there. If it had stayed low, like AMC, I guess, was again the opposite. The comparison would be like AMC dropping here for a spring, you know what I mean? And then going way up, but it doesn't ever reach the top. Instead, it like chills out until June, and then AMC goes like again, right? And that's when AMC hits the high. So it's a little bit backwards in that regard. But yeah, those are the differences. So if we're looking at this and we think we've got a pretty good bead, and I think I do, DJT. Yeah, I've heard people talking about that. Um, I'm not sure yet. A squeeze is a squeeze. I mean, if it's squeezing, just go for it, you know. So this actually does a pretty good job of falling in line with the same general ideas. So it has a squeeze moment in May, and then it's a fake out, and it ends up coming down into July. And that's similar to, let's see where that was now. One more thing, one more comparison here. I didn't do that. I forgot to do that one. Right, that's right, because it was around the election. So November 6th through just December. There's really no comparison here. This is just a cross up. 1, 2, down, 3, 4. It's already, this is just jumping a little resistance. Otherwise, there's not much of a comparison to make. Like the bigger wave function is right there, is what I'm trying to say. So these are lesser waves, and then there's a huge one. That's the cross. You can definitely see it if you look at the RSI. It's right here. You can see that jump more evidently right there. Down and then up. So that's the middle right here. So, I mean, that's the only thing I could say. Maybe this is like a hike up period up to 50, and then there's a backup that happens. But that would be like backwards, Booksy. Because you're saying that you think that's happening now in AMC. But GME is not that high. So wouldn't GME have to be like really far? In this case, GME was already going, so it's a little complicated. Yeah, it might make sense though. It's just tough because we don't have a. There's two different ways of looking at this. One is to kind of look at it as a repeat, in which case, as long as it holds here, it's probably going to go. And that changes things. It dynamically changes things. Because if it holds up above this ice level that it lost, after dipping below here and making a spring, then there's really nothing else to it. This is it. Like it's going to go, and then it'll just keep going however far it needs to go. The build out then is a question not of if, it's more of like when. So it kind of presents itself as an interesting problem because I know it's going to sound weird, but I just don't know how else to put it. I think here's what I think would more likely happen is that you get a pop going into next week, and then it would have to come back. And I just don't know how it could do that fast. So why even pop? May 5th. That's Wednesday. It may be just one of those things where it's a little more progressive. Like it doesn't move in quite as big of a swings as expected. Like kind of chops up here, builds out, and then it has to build a support right there. It has to. There's no alternative. If we don't see it, we don't have a way of gauging that breakout. I think what's bothering me is that and this is wonky because it's kind of off. Well, I mean, Booksy, you've done this before. And sometimes this is like pretty like high, so maybe you're overthinking it. It's just right there. Shoot. Kind of looks like if it just lands on top of this right now, it could just be good. The ice is in a weird spot because like long term it's much like lower. It's down here at like 23, and that might make some sense if that were a phase B bottom. Shoot, it could come down really low, but this may not need to come back much below here again. What if instead of pumping before, what if I'm a little bit too eager here? What if I've got the, well, see, I used this red marker before, and I thought about that because it didn't look quite right. That was where it jumped over, so that could be like the longest, right there, could be the longest way to draw the S-curve. It's where it hopped over the creek. And then it dropped through here. So this is Monday the 5th. I'm starting to see why this makes sense, because that's the point at which, if you go back, I see now, that's the point at which AMC, again, was already kind of going down, but if you look at the big picture as a series of iterations, it doesn't really matter. Because you could just say it's just repeating the same thing anyways, like over and over again. This is the breakout point here in April, May. But AMC is going down like non-stop. So it doesn't ever really stop going down. There's only 2 points where it's kind of high up. One is here in June, and the other is in September. This is that reaction low, which happens near the very end, but it's already going down. You know what I mean? Like it's already been on a downward trend, or downward trek. So my point is that they are different, but if you look at the overall image here, this is just where GME breaks out.
Can I have the rest of it?
That's a lot. Eat what you want.
It looks, it's like this. It's small, but it looks
Okay.
like this big.
If you don't eat it all, that's fine.
It looks small, but it's actually big. I mean, it looks.
So yeah, this makes sense. So here's what I think. I can't really pinpoint it just yet because I don't know. My head's not really working right now, but like I think what we would see is if this is bullish, really bullish, it it's so debatable because one person could look at this and suggest that this is the buy up before the spring. A huge volume there. I think another person could look at it and say that this is not yet done and it's going to flush again. And it is widening. And I got to tell you guys, it almost doesn't matter because if you're off by a little bit, okay, you're off, but it really makes very little difference. So in May, when this comes back down, if it's bullish, it holds the creek, probably holds the ice, and it doesn't go below like 26. Or if it does, it just barely does. And then it comes back up, and frankly, like this is where you might get a more of a one-to-one breakout. Some people were talking about this early on. And this could be basically like a large, almost like a cup and handle, right? Hits the top, drops back down to like a 50% retracement. What do you know? That's 50% right there. Yeah, so that's perfect. This is right where it needs to be. So if this holds up, I think it'll be really bullish. And then it works itself out into June and July. I don't know from this point forward how the comparison should be drawn because from this point forward it's a bit off. I think what you would have is you'd have like a couple big motions here in June. But I want to say that ultimately you need to see that like big wave, and it might be like July. So I don't feel like this is any different than, it's just where are they when this happens? And then this squeezes in July for like a couple weeks, and it goes all the way up to previous all-time highs. Yeah. It doesn't go down low. It abandons it. Because from an iterative standpoint, it's doing the same thing. You're like, what do you mean? Because this is like a right side, and this is like a right side, and this is like a right side, right? So like every time it's doing it, it's creating what I'm going to call like a right side. Like this is the left side of the wave, right side of the wave. You can see it really clearly if you look at it like with your eyes kind of blurred. But if you just kind of focus on the M cross down, this is the right side of the wave, right? And this is the left side. Pretty straightforward. I think you guys probably would agree. Sure, that could be right. Big bowl shape right here, coming back up. This is actually consistent with what we're seeing here. It's the same kind of concept. The reason that we were thinking it would come down low is because this original buy up, when it walks down here, actually goes all the way down to that preliminary sell-off that happened. I wouldn't even call it a prelim support because it happened after this. It's an auto reaction, I guess. It happened after the buying climax. But see, like this auto reaction did come all the way back down to where it broke out, but then when it sold back down, so it came all the way back down here, when it sold back down, it never got to 17. Instead, it buys up sideways. So we had thought that what that could mean is that big picture. This is this is really great, actually. This kind of excites me. Is it what in a good way? This is like a really cool. It's like a living thing almost. Because when you look at iterations, they're like the small versions will make up the big versions, right? But they're all going to be finishing at the same time at some point. Like you're going to finally be like, all right, it's done. And then you could look back and you can say, well, here's what it did. What we were trying to do is find evidence to suggest, well, if it goes down here, and we saw that there was a sign of weakness of sorts, it drove below. If it goes down here, then it ends up signaling that the bigger picture would have something very similar. Well, that follows, because if it goes up, then it drops down, then the next one up would go way, way up, and then drop way, way down. And it doesn't make any sense. Like at that point, you're like, that's crazy. So you're thinking if it goes to 33, then it drops down to 17, that you could end up having some kind of massive pump to, I mean, it probably wouldn't go that high, but it would go above 63, and then it would drop all the way back down to, really, it'd have to drop back down to the floor, at least on the big picture, because you can tell like what I mean. That's what I'm saying, like the working out of it, it's almost like a living chart, because if one does the one thing and it continues to do that, it creates this like waterfall effect of continuity, which is kind of wild. So you would suggest like if that happened, that cat ear happens and then drops, then you'd suggest in the big picture this cat ear happens and then drops. So that's what I'm trying to say. It's like 1, 2 drop. Then on the big picture, you'd see 1 and then 2, right? And remember, 2 ended with an upthrust before it dropped. So you'd have some kind of upthrust here. And you see that the 2, which is the second M, 1, 2 here, that 2 goes up to the top here on the buy-in, which would suggest that this doesn't exceed $50. Instead, it goes up to 50, and then it dumps way, 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 way low, potentially down to $6. But I think in this particular example, it wouldn't need to go past 10. And while that may seem a little crazy and like out there, you'll note that this could be thought of as like a phase B bottom, and then this is like an ultimate spring. So it may seem like it's way too far, but it's really not. If you look at the big picture and you think about what we just experienced, that's the same thing, just on a macro scale. So it almost doesn't matter how far it goes. It just have to come at least to 10. But that's also like a creek test, you know? So it would like drive the price all the way back down to perhaps where that creek is. That's why I have it as low as I do. And I think that the waves do support that. So this idea was like you would come up high and then dump low. But that only makes sense if this does a pump and dump. But get this. This is what I'm trying to say. This is what I was saying. It's like it's evolving like in front of our eyes. Because if you take that same concept, it works. Yeah, they're like, yeah, that's consistent. It works this way. That would make sense. It does not work if, and I don't know, you could argue this has already happened once, this pump and dump. So it could happen multiple times. But there is a second argument to be made, which is if this comes up above and it does the first pump here, but then it doesn't dump, then it fundamentally changes the rest of it. This is like now the outworking. So it's like right side, right side, right side, and then you're going to get to that final second cat ear moment. And if this crosses up and over, instead of crossing up and then dropping down, it is going to then iterate in a similar fashion. And so you would have a jump here, back up about like 50%. And that's very different, because then when you go up again, your expectation might be that, yeah, it could come up to, I guess it would be like, I don't know, is there another ice level? Actually, it could be quite interesting. It may not look like what was expected at all, to some degree. Could be like a squeeze moment in like June that then has like a fallout. So it would be like, because if this LPSs instead, then it's crossed up and over, then you'd have a breakout here in June, and then it would back up really far, come all the way back to like 34, because that's where this is where the flattening is. That's the 50%, and then it jumps up. It goes pretty far. It would probably come up to about the previous top, but maybe not all the way. And then it come all the way back down. And that might actually be where that July move happens. Instead of being positioned higher, it's already down here. And then July, that would make a lot more sense. And then both of them have like a massive push out. So if this if this sets up correctly and it doesn't do a spring, but instead crosses up on the second M, then each of these M's is going to cross up, which is what we actually have on the screen here. I don't know if you can see this, but the green M right here, this is like the middle ear, and it's right at the end of June. So you'd have a big break, but then you'd have a cross up there going into June and July, which actually leads into itself really well. I don't want to say the opposite's true, but it is kind of true that those are both in the same spot. Like, it really makes very little difference. One is more bearish because it follows the red. One is more bullish. But in the end, it doesn't really make a huge difference because you would get to the same end. It just depends on how you get there. One's a spring, one's an LPS. So this has the spring, but it's high, and then it doesn't come down again, LPSs. And then that means that this was indeed the backup. There isn't going to be a backup to 17. You have a decent chance that this goes up to near 60 again, and then the price comes back down into July, and then there's a real big buy up in July. That's where like a squeeze happens. And that is consistent with what we see on AMC, because the timing on AMC is very like convincing to me. And I've been back and forth about the timing. But when I found the July one, I was like, I don't know. You really can, the way I did it anyways, I'm like, there's not really a better way to measure it based on the way this timed out. We get the middle really late, and so everything times out really well to July 1st. Does not time out very well to June 6th or whatever. I know it's still a month away. A lot can happen. Certainly there could be a pump and dump here, or maybe the pump's not that great and it still dumps. We'll change our timing if that happens, but I mean, it could be, or, you know, maybe the idea is there's a liquidation that happens before July, which is where those tariffs are thought to go into effect or be reevaluated. So basically, actually that works really well though. I think that's a very likely thing, because this builds up, breaks to the top, backs up 50%, builds up, breaks to the top, backs up 50%, builds up, breaks to the top, again, right here. That's what I'm saying, like it's all there. It's really clean. And then it backs up. It doesn't need to back up 50% here necessarily, because it's only trying to back up to the, it could, but it only needs to back up to the previous double top. Double top, breakout, back up, double top, breakout. I think this thing goes up to like 120, back up, and it goes all the way back down to $60. And then we will have to see if GME has a two-part move. This is what it looks like. There's a reaccumulation that has to happen right here from 60. And it's right in the right spot, guys. I mean, it's hard to make this stuff up on the fly, but it really isn't in a bad spot. It would have a backup, but then it'd have to have like a reaccumulation in this zone anyways. This is the main sell zone. And then it would go again in January, if that's what happens. Otherwise, I think what we see is it just goes straight up. July. And then, yeah, then you have like a really nasty backup. And then you do kind of the same thing that you did last time. Probably come back to the ceiling here. And I hate to say that this is like distributive, but it's kind of distributive. Because that just looks like a massive like cat ear to me. Yeah, and it would have already hit the high, so this wouldn't come back as high. This only go to like 200 on the second go. And then it would just chop out and then die over here. Something like that. After, of course, February 2026. And it's pretty consistent with the rest of this too. I'm looking at the middle here. That's really what's getting my attention too, is that if you look at this center mark that's coming from the bottom up, that's the big one for me that I've been watching really carefully. And I think this is a really important marker. This usually signifies where you're going to SOS or have a UT. I'll highlight it for you. It's the most likely place. So it's highly consistent with the July run, and it just depends, you know, what happens next. If you have an SOS, this could be really strong. And actually, you might actually see it like SOS here and then break up again, and that's really where you get that UT. And who knows, maybe it does go higher. It goes to like 320. It seems almost impossible to believe, because it's like, can it really just do the same thing like again? But it is genuinely what it looks like. What happens if it goes above? Well, I'm not sure it will. Because see, I think this is the top of the range here. I think this is going to be it. It's going to be like between 230 and 270. I would be very surprised if it didn't distribute here. I think at the end of the day, what we're really looking at is we're looking at something like this. And what we may be seeing with a lot of this S-curve business is that we're starting to see like an inevitable target that is trying to get to on a bigger picture. I genuinely think this is probably a really simple example. You see this chop right here, the walk down, it's a really similar setup. And if this is what ultimately is about, then you see something similar happening here. I think it's very likely that the market, meaning that your bull operators even, are not really bullish at that point. You take it up really high, it's hard to say what happens, but anything up here could be thought of as a SOS or a UT. So, and then what's crazy about that is then if you go backwards, yeah, this could have like a really gnarly sell-off. Because this whole point, the whole point of coming back up is to retest this trend and to retest the top. And if it's not successful, you don't get like the SOS, instead it's like some kind of bearish thing, then all this early business is really just defining features. And if you go back and look at where that goes later, there's like no doubt about it. Like it comes back down to that creek later. If that's the goal, then that marker that's not being met now, it's like quite the opposite, right? a marker that's not being met now would be a potential target for later. It seems a little ridiculous, but it could come all the way back down later. It's hard to see how that could happen. In fact, you might even say like it seems impossible that that would be the case. But I don't think so. It wouldn't look like the rest of this. It would look kind of different. You would have like a multi-stage breakdown because it wouldn't be like all at once just dropping down. What would happen is you'd basically have what looks like a head and shoulder, but it's essentially gonna be like a hook. So it would come back to like some level like 28 or 24 that we're comfortable with, and it would do that kind of like it did here, but like more rapidly. And then it would have another attempt up, but it would fail if it's bearish. I'm not saying it has to be. I'm just saying if it's bearish, then that's the expectation. And then that one that fails would be like inevitably like a real breakdown. And then it would end up going into a series of LSPYs, which could take a long time. I mean, it could take years, you know, to walk it back. And I don't necessarily think it ever gets to this creek either. I mean, it did here, but part of me thinks it's really more about this guy. I think I drew this a while back, but this guy is never really been checked. So it may end up being one of those things where it looks really negative again, but it may just be evidence of like a trend, because you can see like the long term here is not really the same, big picture wise. That was off. Let me make sure that's a little better. Yeah, like right there. Something like that. Take you back to that major creek. And it would look really bad, but it's just like assuming like a new trend. So then if it comes up again, which is totally possible, like it could happen again, 2029 or something. Another few years, right? Like a 3-year cycle. And then it could happen again. And in that case, you'd be looking at a reaction back towards this middle, where the middle center mark is here and here. You could still go back up to like 39 and yada, yada, yada. I mean, from then on, it's just whatever. It's too far in the future. But you'd easily could see a reaction back up here. And this is one of those things that could last a lifetime. Because like in theory, while I do think that it's possible it could just squeeze forever, mother of all short squeezes kind of deal, part of me wonders if the goal wouldn't be to do that, but to just have like a stock that's like a massive cash cow kind of thing. Like it's just something you could constantly get shorts involved with and then squeeze them out, and get retail involved with and then squeeze them out. You'd have to put a lot more money into it, but that's kind of the way manipulation goes anyways. So yeah, you probably have another drop later. I don't know. I would think that just because of, it may not look like that though. Probably more like this. Because it would come back to this level. And if that holds, then you have an opportunity to come way up. I know it seems like it doesn't make sense, like it's way off there, but really a lot of these markers are already here, you know? Because if they generate bottoms like right now and they hold, then you have some trends that you can follow through with, you know, at a later time. And these are things that I would look for long term. And you have a wave here, you'd have a wave here. So this is like an S curve. So it may seem like it's too far away. And in some ways it is, because I mean, we don't know the future of the stock market and everything. But in other ways, it's really not. Like, it's not that hard to imagine. This seems pretty straightforward, actually. Like, that's the wave. And then you just have to have a spring, and then you could basically go right back up. And we don't know, again, long term what would entail, because we're not able to read into the future too much. These are like similar motions. I mean, really are. That's the same squeeze motion right there. So it's certainly a possibility that, even though that may seem a little outlandish to some, I don't think it's that big of a deal. It kind of makes sense to me. And then this kind of resumes this idea that like we're really we're gonna use like a lower trend. That's what I was trying to get at a minute ago. This is where the breakdown happened in 2021. And I've been wondering if the distribution is more about, in some ways, more about getting above that and then using this as like a hook, driving the price back down. That fits quite well. And that takes it closer to the original opening price trend here. And then if you reset it, then you have the ability to take it back up again on a more regular basis. And you're kind of low key like walking it down, because you're not allowing it to go back up above these elevated levels. But you saw, they saw that it traded there. So they can keep testing it and seeing if it trades higher and higher and higher. And in the grand scheme of things, this just looks like a gigantic higher high kind of, or higher low kind of thing. The average Joe trader. And it is, again, very, it may seem very odd, but if you look at the bigger pictures, these are pretty good wave interactions. They're really strong. I wonder if it's this one. Yeah, it might be. So it's like ways of making it kind of reset. Honestly, if I'm a hedge fund operator and I'm like looking at this, wanting to eventually get all retail out, I'm not saying they'll be successful, but if that was my goal, then I think this is probably how I do it. I'm just saying. That's how I would do it. There's a lot of good reasons that you do it that way too. So anyways, yeah, so this actually adds up quite well short term. So we'll see what happens. I think it's likely this is going to go back up to 30 short term. And then we'll have to wait and see what the next movement brings. It looks like it's going to start consolidating. Surprised this came down as much as it did on the 1 hour. So we'll see. I think it's going to try to get to 30.32, and then we'll see if it consolidates and holds above going into May. See if it consolidates and holds above. But I'm going to go ahead and make a guess here that this may not actually go all the way until AMC's pop. We'll see. That's a tricky one. Or if it does, maybe the idea is already moving. Since it's a lot like AMC, that would make sense. So you know how AMC had its September move and then it starts dropping? But GME keeps going up. And this is just a micro example of that. There's that pop. That's good. This could go up into April 25th and then insert down into May and play catch up. Whereas GME on April 25th is already like advancing. That would be like this. It does kind of beg the question though about some other stuff. But then this May pop is not like huge instead, and then it sells off going May 14th. It's a little different than maybe this. Why not just rock it? I mean, it could, but like I said, I don't think it's necessarily one-to-one after that with the previous year. I think that's a little bit misleading. Because it's a different setup. It's like different spots. We'll have to wait because I can't tell you right now. I'll have to wait and see what happens. But this actually makes a lot of sense. And then the May run up, even though it's really exaggerated, this is really where they deviate quite a bit. And they essentially go opposite directions from then on. Until July. So how'd we do? We said we thought the S&P 500 would have some kind of a little bull run. And it looks like it did. And then we said that probably we start setting up into the end of the week here. All right. Didn't go when I said it was going to go. Instead, it went back down and made a higher low. But it's pushing up to that target area. So I had it at 5:14 or so. There's only 10 minutes left in the day. It just has to get above this top. And I think it's got a chance. It needs to push this resistance. Probably would do well to not go above 515 into close. Like ideally it stops even before then. Maybe right here at like 514.38. Because you want it to like advance and then go back and check the creek. You don't want it to advance like more than one or two levels necessarily right away. So did it advance? I think it did. Oh yeah, it did. Perfect. So that's good. So then you kind of want to just see it come back down and make a higher low. I don't really think anything else needs to happen. If it makes a lower low after pushing up here, that's no bueno. You don't want to see like a steep sell down. That would be kind of bad. Pretty darn close to where I thought it was going to be. If it dropped, and it did drop. I guess I'd like to see it show a little more strength Let's look at this before it takes off. I'm on a really small time frame right now, so that's weak. I mean, it could be a double bottom. If it's first thing in the morning, maybe 509 or something. I don't really care at this point. As long as it doesn't make a new low, I'm okay with it. Triangulation here may actually be quite safe. That's tomorrow at 10 at like 509. I wouldn't put a whole lot into that, but I think that's fine. Because if that happens, then it's actually in a really good spot to continue. So we'll see. I really don't want to see it pop way up. Why not, Booksy? Because usually that doesn't end well, especially if it goes too high. I just don't think it's a good thing. But you have the line going way up, I know. But I really want to see it come back first. That's stronger to me. It could be that that's where we come back to after, or maybe even before Tuesday close. So it could actually go pretty high early and then drop all the way back down. So maybe just not exceed 519. I don't know. I just don't want it to bleed too far into the next range. It's not a good thing. I don't see how this goes unless it has a really serious strength signal though. But it can't be distributive all the same. I think this would work. I'm just going to leave it. It'll look something like this if it's going to go. It's just, I don't like the bowl shape. It just feels like it hasn't made the drop yet. So that's why I wanted it to go ahead and see it pull back. And then if it hits that drop here and then reacts and goes higher, then I'm feeling really good about it. Does that make sense? That bowl shape is kind of a meh. Like, it just doesn't usually end well. You like those V shapes, not the U shape. This makes me think it's not going to stop, honestly. Like, if it hooked here, and then it makes it look like a hook, is what I'm trying to say. It makes me think it goes up. If it just kept going up, and then, like, craps out. And, like, keeps going. That's really backwards, but that's the way that it would look. So I don't want that. Oh, man. Long day. All right. Well, some of these positions got cooked. Not all of them. I think that the patient will be rewarded in this. I do. think if you're patient and you get in at the right time here, it's going to be a really good trade. Last time it did something like this, it ran really far. I can't promise anything, but I think if we're patient about it, let's call it I think it's going to be really good. I don't know what the volatility is on. They're only like 5 cents for like $4 contracts. 8 cents. 350 is that's for May 16th. It's 8 cents a contract. So if it got to 360 or a higher, let's just say 430. If it did that by like on May 7th is a Wednesday though. Wait, did they change it? Because I don't know why I would have put this on Wednesday. I think they changed it on me. Yeah, maybe. Or I did this on like a different time frame or something. But it looks wrong. Now I'm wondering if it takes like an extra week. It doesn't go till the 12th, 13th, 14th, 15th. Again, like a 3-day thing. I don't know why I did this. For some reason I thought it was here. So I'll have to double check it. But it seems wrong to make it that early. Well, whatever. The 16th is where I have some options contracts. Yeah, so this would suggest it's even slower. So what did I do? I measured it out. Why did I think it was going to be there? There must be a reason. Oh, I think because it was where the LSPY is. Yeah, I measured out the timing based on the bottom and where this dropped through the LSPY. I think that's how I did it. And it did not. Something's really off. Yeah, and it's May 5th. So does it run up into earnings this time? It could be that it's actually when it jumps the creek. And that might be what we're doing down here for so long. So if it doesn't jump the creek until If it doesn't jump the creek till Wednesday, then I think that means that they're avoiding it. They're going to do it after earnings, I think. It'd be really tight. It's kind of strange because that timing changes things. Anyways, so if you picked up these 8-cent contracts or whatever, and there's no change in volatility at all, which doesn't seem very likely, but if there was no change, we may even have a reverse change, knowing the way the markets are garbage. If this hits here and opens up at like 4, and you're able to sell at 4, I could do the 6th, and I'll do the 6th and the 13th. So on the 6th, if it opened at 4, that's 600% gain potential. The 13th, it's 550%. But that's also with no change in volatility. And that makes it sound like you're guaranteed to get profit. There's no guarantee this happens. But that's the way it's timed out. So, I mean, that's not really a huge investment. If you miss it, I mean, it's possible that you miss it. You know, you're not going to get as much. But if at the very least it came to 360, you'd still see 100, 200% pretty easy. So, again, with no change in volatility. I don't know, it's too slow. It looks like slow, like snail speed. But then again, they did take it a little bit low and it held up. That's a good sign. Just don't want to see it drop below that bottom at 262 area. I think that would be pretty strong if it holds above 262. It could hit 263. I wouldn't care. Just don't want to see it drop 262. So because it's moving so slow, I think they're intentionally, like they dragged it down so they'd have more room here. Because if they had taken off a little earlier at the top of that, which was at 270, it would be shrunk already back to where it was. Meaning like it would have been what I had kind of anticipated. So it looks like it's being dragged out a bit. So this is 47, 45. Let's do 47. What is this? 47.38. I don't think the short squeeze ever stopped. Somebody asked me about that, and they said, well, what happened to the short squeeze? I said, I think it's still going on. No, it's not. No, I really do. I think that this is part of it. It's like the first push-up without making a lower low sort of is the big part of it. I mean, that's essentially the reversal motion. So we need to just see it follow through now. But if this takes too long, all this gets stretched out. I'm going to have to go back and like look at the chart data again. Might be too early on this. That's okay. More time to prepare for the move. I guess I couldn't tell you guys what to do with your money, but it may be a situation where, let's see here. So if AMC's earnings is on the 7th, and it drops back down and compresses for 2 days. And it goes on the 12th. That's very similar to last year. Hard to say where this would be at that point. I guess it could be in the same spot. It would have had to have already made its backup, so it has to happen somewhere. It could happen earlier, like here, and then that way it doesn't have to come back down again. It can just like be ready to go. Yeah, I don't know. We'll have to try this again. That changes things a bit. This is confusing. My brain's probably just fried. So, probably shouldn't worry about it too much. I guess what I was thinking is if AMC has that downturn and GME doesn't, and you don't want to play into it, then you could just wait. You could go to GME after on the 15th or whenever. But I guess my bigger concern is if it plays much the same as this did, it just sort of makes things tricky because we may still have like another kind of long-winded motion here. Yeah, I'm a little nervous about that going into June here. And then again, it makes sense because then you'd have a build out in July, kind of like this, but having it over here. So it gets too small. And it's like really tiny. And it'd just be like this big squeeze moment. But yeah, if you didn't want to play AMC, then after this sell down, whenever that happens, I think you'd probably be in a good spot. Probably be in a pretty good spot to jump back into GME or something for a bit. You know? I mean, you never know. Maybe I'm wrong. It just goes to the moon. But I think that this is probable. It's more likely it's going to shrink, in my opinion. This is consistent because this is an iterative motion of the whole, but it never came back down again. It stays high. And actually, it never came below, if this is the way it's going, it never came back below the second ear here. And that's the same thing we see roughly here. It didn't come back below this second ear. So it would just be a matter of like waiting it out. The second ear would be this guy. Sorry. So that's the sell down. So yeah, it would never come back below like 30. It would chop into 30, but it wouldn't like drop beneath it. It would just stay above 30 and then build out again. And then it would have another upthrust and come back down, but it wouldn't go below like 37 or something. It would be up here, and then it would just go. So this is just an iterative version of what happened here already. Yeah. So AMC's iteration is downward though. Because when it went up, it went below all the way back down to where it started. So it went high and then it chopped all the way back down. The GME did not. So it would go high and then it would chop all the way at least back down to 250. But I think the ideas are the same. Like the concept is that you're doing the same thing over and over, but when you get to that July portion, it's like the extremity of the moves has to happen. So the extremity of the moves on GME haven't been that extreme. They're just sideways. So there's something really boiling up here sideways, right? Like if you look at the overall motion, the original one does come down, but now it's just like flattening out. So if it does the same thing again, it flattens out again, it's going to be just sideways. So even if it did like another iteration that's really tiny, what would you say the extremity is? Well, the extremity would be sideways, you know? Like it would not be that complicated. It would basically just be like a kind of more of the same, I suppose. The right way to put it is you would just have like another version of everything, but it would go... it's hard to draw it because it'd be really small. Trying to get this kind of in the right spot. Yeah, it comes down, bounces, doesn't go past 30. And then this stays pretty high into May, and then May 28th into June. It's just an M cross, and then there's like a cross down that happens in June. But this is the one that like this is like your final one, and it doesn't go anywhere. Like it doesn't. There's nowhere to go. I'm a little nervous that this forms into like a double cat ear, but if it doesn't go crazy, it kind of just be here, and then it would just compress again and do it all over again. But what's crazy is like this build out just looks like a series of moves up. But then if you think about what's going on here, is like it's almost flattening out and then rising. So each of these would rise too. So it's not even that it's just flat, because the first one went down, this one was like flat, and the next one would be up, and then the next one would be even more up. Each one would get more and more and more extreme because it's like a twisting of the rolls. So instead of bears kind of getting their way and bringing it low, bulls are now taking it higher. This probably turns into an SOS, to be honest. This first one right here. And then it backs up to the creek, and then it's now in acceleration mode. And then the next time it does it, it's like a tiny SOS right before it takes off in July. And that's all she wrote. That's the whole move. So it seemed really weird because it doesn't look like these are iterations, but they actually are. But then GME and AMC look really different in this regard because the iterations for AMC are compressing downward. And so it goes to like a point break where it just kind of does the same thing. Probably, again, not sure exactly how it looks, but we would say that this would come down no matter what. You have to come down over time. And just assuming that they're kind of similar, maybe the second one's like mid-June or something. Now it's like a 2-week period. Yeah, so this is exactly where I had it, but I was thinking it would be like here, mid-June, because you'd have to have an upthrust right along the corridor that you're trying to drive through, which is like the 50% marker. But then it's so ridiculously extreme that, and it's so tight that it goes almost straight down. So each of these would be more and more extreme. It could be flat. I mean, I don't really know for a fact that it has to go straight down there. I mean, we're really making a lot of jumps to conclusions based on what we think the OBV has in store. But in reality, I guess there's different ways it could happen. It could flatten out. I don't really want that, to be honest, but that makes me more nervous about a pump and then a dump. That makes me worried that it's going to do something like what we see, where it goes to like $8 and then it comes all the way back down to 2 or something. I don't really want that. I'd rather it kind of go more parabolic down. And then this is like the nasty one here. That's the one that drives the price rapid fire into late June. And then it does it again, but this time the change of characters there and it starts jumping back out. And that's what happened last time in January. So this builds itself out as like a big old walk down, but then there's a creek jump as the accelerations move forward, and it plays catch up pretty fast. And I don't know exactly how quickly this will move, but I would think it would be rapid fire at that point. It might be up there within a couple weeks. 20 days or something like that. Yeah, so this is a LPS model here. This is a spring model here. Very different. But ultimately the goals are kind of the same. And weirdly enough, actually this could end up being the big move for GME. So it will depend a lot on what happens at the all-time high. But you could easily go up to like 230. I mean, if you were just going to play one or the other, shares only, I definitely would be in GME. Just personally, I think it'd be better. But I guess it depends on your overall outlook here. This is a weird day. All right, guys, I'm done. Hope you have a good one. I'll talk to you later.